Right. Good afternoon, everybody. This is Sherry. I'm your host for your tradersexclusive.com webinar. We have some great speakers coming up today for you. We're going to learn to utilize the market's true volume. We're going to learn to anticipate market direction by reading the market map. We're going to understand why exactly struggling traders make the same costly trading mistakes over and over and over again. And we're going to trade a strategy that's immune to market volatility. And that's only one point out of each person's presentations. Please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. That's also where you're going to find today's recording of today's webinar. And before we get started, of course, I do the infamous disclaimer. Whoops, went right past it. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations presented here are subject to change at any time. Past performance is not necessarily indicative of future results. I'd ask you to please take notes and write your questions down with some context, because most of our presenters like to get their presentation done and then take questions. Now, some of them like it differently, so I check with them. So take care with that. I'd like to introduce you to Simon Jousef. He's with the Trader Institute. He's going to talk to us about 10x, Forex, and futures trade probabilities with secret bank levels and volume profile. Now, that is quite a mouthful, and I know Simon's going to tell us about it. He's the head trader and trading educator for the Trader Institute. He provides day trading signals, market analysis, and education. His first public class was in 2004, and by 2010 switched to online conferencing due to global demand for his classes. Simon focuses his education and training on the core of what moves the markets. You know, it's about buying and selling, so volume or volume pressure is key to understanding the markets. The market makers are the ones who control the moves, and his dynamic math-based indicators and system allow you to see the moves ahead of time. So welcome, Simon. And I think I might have, okay. Now you're self-muted, and I'm going to give you presentation. Hello, sir. Thank you so much for joining us.
Thank you. I'm just trying to choose a proper screen here. I'm sorry.
All right. No worries.
Okay, audio, video. Are we good?
I see you have 1, 2, 3, 4, 5, 6 charts where I can see them.
Thanks, Sherry. Thanks, everybody. We are sorry for the delay. Nothing we could do about this, but I'll do my best to finish my presentation within 40 minutes from now. Although I think there's hours and hours of things to be said. This is the typical view that you see in front of you. Typical view that my students, my members, my followers would see. A chart for the crude, ES, NASDAQ, RTY, YM, and GC. Sometimes we switch, we will bring other ones. But overall, I stopped my data feed so I can be more fluid with this. But if you see on the top of this screen, you'll see NASDAQ, Russell, Dow, ES, crude, nat gas, gold, silver, yen, Aussie, euro, pound, Swiss franc, Canadian. So there's a lot of instruments that we look at. In today's presentation, we will talk about higher probability trades with volume profile and market makers levels. Now, Sherry mentioned something about secret market makers levels, math-based, and the importance. It sounds really, really important, but unless you come and see it yourself, you really will not believe how crucial, how important it is for you to know what are the big boys up to? What are they up to? What are they willing to bring the market? Where the market is going? Where the market is reversing? Where is it going? What is your target? So market profile and volume profile and market levels are the most important levels. And to give you a quick view of what I mean, for example, on gold, I just mentioned to my members just now before I entered this webinar, and this is the Telegram channel. Of course, we have the Telegram channel that you will receive on your phone or on your computer, levels, trades, exit in, and we'll get into this more within this presentation. You'll be more familiar with this. Let's go to the gold channel. Just now, metals, which is gold. I told my members gold is coming back down to 1830. So it's facing some, see, just now I said this, 1:09 p.m., just before I got into this webinar, 1830. And why do I see 1830? Is because the main attraction level, you see this magenta line here? Right here, this is the main attraction level. The market is coming back to it sooner or later, so I need to find shorts. If I go back to the next slide, before I forget, and this is very important because I don't think whatever minutes we have here will be enough for me to explain. You need 2 weeks, and I give you 2 weeks of free unlimited trials, and I will invite you to the unlimited trial. Just, simply go to the website, and let me close these. You don't need these. This is the website, thetraderinstitute.com. Sherry has a handout. Sherry, I'm sure you received my email, a handout that you will give to everybody. It has all the information that you need. But if you go to the website, to my website, first thing it says, great, thank you. First thing is get your 2 weeks trial. You will receive 2 weeks trial, and you will watch me 3 days a week live in my live trading room. And that's 2 hours a day. That's 6 hours a week. And then the rest of the day, from morning until the market closes, I am on Telegram. So you'll receive signals, okay, on your phone. And signals will be for indices, for metals, gold and silver, for Forex trades, or, spot or even futures Forex, and oil. And we have oil. For example, oil yesterday, I said it's going to 88. I don't have the picture. I cannot enlarge the picture, but I said it's going to 88.50. Yesterday, this is yesterday, January 18th. Okay, if you look at gold today, sorry, if you look at, where is it? I have so many things to tackle. If you look at crude today, it actually touched 88. See, the top was 88, so there's still another 50 cents coming up after. So this is from yesterday. Yesterday was around 85 or something. I said it's going to 88.50. All right. So these levels. Now, going back to the presentation, you need to join the trial. I showed you the website, and you'll have a handout as well. Next on the presentation is when I started about 20 years ago. Actually, very soon I'll hit 20 years in this business. I started with regular support resistance, Fibonacci's, and soon after I added something like this, the bid and ask ladder. This ladder, I played with it for many years. It was very important. It will give you all the numbers you need, but then it was still not enough. Not enough. This will give you immediate numbers, nothing futuristic, nothing what's going to happen. This is immediate for immediate entries, exits, and it was not, at best, it was probably 60%, 70%, at sometimes maybe even less. Very deceiving, and it requires a lot of attention. So from that, we jumped to something different. And if you're trading support and resistance, if you're trading indicator, you would understand by now, it's not only you. Globally, most traders, they use the same levels. So the market makers know how we think. If you're a technical trader, they know exactly how you think. And if you get married to a trade and you're hoping it's going to reverse in your favor, then that's not a good strategy. I have John, for example, says once, when you are trading and watching your normal charts with lagging indicators, often the market will reach a point where it does something you just can't understand. And really, you cannot understand sometimes the moves. But if you see the volume and if you see the market makers levels, it will clear up a lot of confusion. I'll give you some examples and you'll be amazed with the levels that the system that I have could present to you. He says using volume profile, this the way Simon does, gives you a window to otherwise hidden currents that drive the markets. He's asking the members to quit, or the new members to quit reacting to the market. Just be proactive when you trade. How many contracts we trade, how do we trade, and what do we trade? And I'll be very simple with this because I want to show you more important things. We, as you saw on the top, Nasdaq, we trade multiple instruments. Again, a lot of them don't give me anything until maybe once a week, or maybe twice a month. For example, the euro. I told everybody the euro is going up, and we are looking for a market on the euro to touch this level and this level, these two levels. And I put that on. You see this? If you go to the indices channel, it's here. You see, I gave everything. I told the euro is going to go up, the pound is going to go up. For example, the pound already gone up a little bit from here. It's going up to this level. Okay. I said Canadian is coming down to this level. It started to move a little bit now. So we do that. Okay. Where am I? Okay. How many contracts do we trade, and how do we manage these trades? And I will show you before I get into the video so you can understand. Let me just find my, okay, here. When I call a trade, the trade is for 3 contracts. Okay. For example, a short. I'm looking for a short from a level on Nasdaq. Let's be very realistic. Okay. 3 contracts in, I will tell everybody, take a short. Before I call the short, my stop loss is already established, because I never, ever trade or call a trade without a stop loss. I have to know my stop loss ahead of time, and throughout this you will know. So, and then I tell them, take first target, for example, at this price. So the market goes and then comes back down. That's first target. Your first target, T1, remember, is on 2 contracts. 2 contracts. So we take 2 contracts out. Of course, you can change the style, you can change the system after you learn it. You can adapt yourself or adapt it to whatever you want. As long as you see the levels, as long as you see the trading, as long as you see the logic behind it. So for example, we got 40 ticks on first target. What does that mean? So on 2, that means we got 80. So now we are 80 ticks up. If my stop loss is 60 ticks, I'm still making money. And I don't move my stop loss unless there is a level that makes me feel comfortable. After it moves in favor, we move our stop loss lower. We call them smart. I wish I can write faster here. Smart stops. Okay, that's all part of the education that I offer. All part of, and you have 2 weeks, folks, to indulge yourself in this and learn and monitor us. Okay. Now, once we move, for example, the Nasdaq, I called it, and I will show you in details. The Nasdaq, I called it from the top yesterday. I said it's going to come back down to the bottom because I showed you the levels, the magic market makers levels. That was about 1,000 ticks. I did not get it all because my runner got stopped out at one point, and then it continued down. I had to protect my profits, but it continued down. This morning as well, I called it long, and currently is about 700 ticks as well. And during the day today, I called it short as well. So anyway, I will show you all that. But for me to be more specific, I'll try and be a little bit more specific. Most of us, for those who trade technical analysis or a combination of technical versus volume. Technical analysis, if you're trading, for example, you're looking for a long let's say let's take that example, and you have the market. In this example, I'll show you how volume profile work. Volume profile is this, folks. Volume profile is on this side. If you see on the side, let's go to the Nasdaq, for example. If you see on the side, you see these green on the side with edges. If I can sharpen the edges so you can like them more. You see this? Volume profile is on the side, the green, the yellow, the red. This is volume profile. And the more I add into it, the more you see. So you see bigger picture like this. Each level of these of this structure means something. We have support, resistance, continuation. And I'll give you some examples of this. For example, this is a resistance, or could be support as well. This is red, also considered a continuation zone once we're in it. Red color, no, I wanna change the color to blue. So we have a continuation zone here, and there's resistance or support, and there's another continuation zone here. Of course, you can, and with that, you will learn there's a continuation zone here. With that, you can easily change it and see more or details by maybe decreasing, maybe expanding, by maybe making it more sharp, smoother edges or sharper edges, as you see. Okay, you can do that, or you can just enlarge it, as you see, or minimize. This is designed for us with Sierra charts. So we use Sierra charts, and there's a good reason for me to use Sierra charts. I was a fanatic of NinjaTrader. I stopped using it because it really cannot handle the amount of charts that we use, and there's no market depth in it in a way that I can use see market levels. I can't. They have immediate market depth, they don't have historic market depth. Again, that's a technical question we can cover through the trials if you join us. Okay, so let's go back to the drawings. You're looking for a long, and I'm looking for a long. And don't take it personal, okay? Just a technical trader versus somebody who looks at volumes and market makers. So the market goes up, goes up, goes up, goes up. You're looking for a long. You would say, okay, I have three levels. I have a level here. I will maybe grab it long, and I have 50% retracement here, and I have 62%, 68% retracement here. They're all Fibonacci numbers. So the market goes up a little bit. Oh, I'm sorry. And then comes back down. You take the trade with the random stop. First of all, I don't do random stops. I have to know my stop loss to the tick. You do random stop, it comes and takes you out, stops you out. You say, okay, 50% is the best. It comes here again. You take the trade, get now two stop outs, and then it goes back up because, okay, 50% it held, but it basically just poked a little bit. Let me take it long again. You take it long on the way up, just comes back and stops you out. And finally, it starts moving up from here. You got 2-3 stop outs and you missed everything. Let me just mute this. This is my students talking to each other and me. Okay. So you get stopped out. Now, me, when I trade, I look at it differently. Now, think about this. I said volume profile is key. So when I showed you my volume profile consists of levels that are continuation zones. This is a continuation zone, for example, and there's another one that is a continuation zone, and another zone that is continuation. They all look the same, but they could be a bit different. These are continuation zones. In between, you have rejection zones. So this is continuation C, continuation C, continuation C. In the middle, you have rejection. Now, that being said, the market touched the top of the continuation zone and started the tracing. there's no reason for me not to call it short unless I don't have a stop loss. So the short would be called. But let's say I didn't call it short. I'm waiting for a long. Now you took it from here because it was Fibonacci level. Does it make sense? Because it's inside a continuation zone automatically. Once you see this, you will ignore this trade. Now you saved yourself a ton of money because now you don't get stopped out. Moves down 50% here. Does it make sense? No, still doesn't. It's in the middle of the continuation zone. Finally, it comes back down to this level. Watch this. Are we taking the trade here? Step one of my trading. Step one is anticipate. I am anticipating the long, right? I told you. Anticipate the long. I'm anticipating. What am I looking for? Confirmation and execution. So I'm anticipating first thing. So I'm anticipating the trade. A, anticipate. Now I need my confirmation. When I see my market levels, if you see in these charts that I'm providing to the members, you see those magenta lines. You see those magenta lines on the short term and long term. They will pop up. And once they pop up here, or they will be here in the first place, this is when I can confirm my trade. So now I confirmed my trade. Anticipate, confirm, and then I'm looking for execution. Now, if the rejection zone is small, such as this, I have no problem because now my stop loss is really clear. My stop loss is exactly at the entrance of the next continuation zone. Why is that? Why cannot be at the green level here? Simply, folks, because if we get into this continuation zone, more than 20% or so, it's going to automatically continue all the way down to this level. So if I am risking, if I can risk only 10 ticks, why do I risk 50 ticks? There's no need. So here at this alone, you are saving, if you do some math, 5 ticks on each 3 contracts trade, that is thousands of dollars a year. Just on the stop loss, if you choose this proper stop. So the market comes down, goes in favor, take first target, and that's execution. And this is what I call ACE strategy. And goes in favor, and then with that, once we get into a certain level of this continuation zone, I will ask my members to move their stops, according to the smart stop level. 1 second, let me have a sip of water. Okay. To show you the importance of this, these are some old pictures from the old days. I will show you Nasdaq yesterday and today. And when I tell you I called a trade, folks, on the Nasdaq yesterday, the 18th of January, there was no live room. No, there was a live room. Yesterday was Tuesday, January 18th. I called the Nasdaq short in the morning. Here, Nasdaq resistance at this price, 154.14. You see the time of the day. Nasdaq possible short at 15430 area. Nasdaq stops. Watch this. I have not even called the trade yet. Nasdaq stops above 15440, and then I called one Nasdaq short, and then I stopped at 15430 because pressure changed. I called that a better stop loss. This Nasdaq trade went for 1,000 ticks. I got a couple of hundred ticks out of it because my runner was stopped out at profit, was ticked out, and then it went down. But if you look at my target, my entry 154, it was around 154.15. If you look at here, Nasdaq possible swing short to 15120. 400 points. No, 320 points. That's not ticks, 320 points. Okay, that was on the Nasdaq. This is the actual recording. You see this, and you see on the right, on the left hand side, my students here during the live room. First thing, I anticipated the Nasdaq to go up. You see the Nasdaq before the short, before that short, I called the Nasdaq long. Watch the Nasdaq. Watch the right hand side. I hope everybody can see this. Let me maximize a little bit more here. This is good. I think this is good. Watch the Nasdaq. Look at the arrow. So I'm looking for the Nasdaq long. Why? Because I have pressure. Market makers are telling me it's going to go there. Watch, keep watching. I called it long. We got the long. That's it. See that? It's going up to the line. And then I'm looking for a short from there. Okay, that's it. I'm looking for a short. I have not called it yet. The short was called already. Let me see. Let me go back a little bit. No, hold on. You will see me call. Of course, I have audio on this too. It's recording from the live session. Okay. If I go back to my, this was it. See 10. This was the call that I made. So I'm looking for 300 point, more than 300 point dip on the Nasdaq from here, right? And this is the recording of it. Why? Because everything is cleared. Not every day is going to be no, for sure not, right? Some days will be confusing. So that's why I don't trade every single minute, every single hour, right? Look at that. Look what you seen it clearly, folks. I hope you've seen it clearly. And here, a member of one of the members says I got in 20. I called it from 10. If you see 10 or better was here. So we averaged 15. He got it in from 20. His entry was our best entry amongst everybody, right? Let me erase the drawings. And then if I fast forward this a little bit, you see it going back down. First target was taken. Stop loss is secured. Nothing will hurt us anymore. And then I moved down. So now look at this. This was the actual call. This is the video of the call. You see it. The times there, everything is there. Now, eventually, if you look at it, Nasdaq comes down. Eventually, 150, 15120, folks. If you have no idea how exciting this is, 15120 on the Nasdaq. This is the daily. This is the hourly. The trade was called from here. It dropped. This is 15120. This was the trade call, folks. This was the trade call. I called it long initially and then down from there. Okay, this was nearly 1,000 ticks on the runner alone. I did not get it all, as I said. This morning, let's go back to the video. Let's go back to the video. This is yesterday. Now into today. Where is it? Here? Into today. This is now, today, this morning. I called it short again. Why? Look at the magenta line here. This is very exciting. Look at the magenta line. This is now, this morning, like this morning session, live session with my members. Look at this. I said the market is coming down to this price. If anybody's confused or lost completely, you will have 2 weeks with me in my live sessions to enjoy this. Nasdaq possible short. This is now, today. If I show you the actual Telegram, this is my live Telegram. This is 19th of January, this morning. First thing I said, Nasdaq, YM, and ES are facing resistance, and I gave the price of the resistance. If you check this price, this recording is available. will be available. If you check this price this morning, January 19th, you will see this was the high in the morning, these prices, and the market dipped from there. Maybe it's gone up after, I don't know, but it dipped massively from there. NASDAQ short from 1525, possible short from this price, as you see, and then I called it short, I gave them. So, but let's go back to the video. Then you see I'm looking for the market to come to dip to this price, which is 152.50. I'm looking for about 60 points move in favor. Okay, fast forward slowly. NQ possible short, NQ short now at 8:58 a.m. this morning Eastern. I called it short. Now I'm looking at take T1 at 8:08. So I'm looking at 7 points target. What is 7 points? 7 points, that is 14 points because I'm taking 2 contracts out. What is 14 times 4? Because each point is 4 ticks. That is 56 ticks. So my first target, immediately I got 56 ticks out of this, right? So once that's done, the market comes back down, and eventually it comes back down to the price which I mentioned. Where is it? Look at the price. Do you see what happened here, folks? All right. Now, remember yesterday, and I showed you from the charts, yesterday's charts and yesterday's trade call. Remember, I mentioned the price. I said the market is coming down. The NASDAQ is coming down to 151.20, right? And it did. Overnight, it actually broke, it went lower, and it went up this morning. And this morning also came down to 151.20 again. Actually, I called it this morning. Here, look at this. This is the second trade this morning on the NASDAQ before 11:16 a.m. after I closed the room. Okay, see this? Looking for confirmation around 151.20 for a long. And then I called it long. And my stop loss 151.100. And then it actually dips a bit lower against us, but it doesn't touch the stop. And then right now, at one point, it was up about 700 ticks. It goes against us a little bit, but then it goes up, dip, 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 and then goes up, 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 up. Okay? And if you look at the NASDAQ now, from this trade, before I entered the room, I stopped the data feed. We had about 700 ticks move in favor. Okay? So these moves are important. Let me explain a little bit more about what do we have? Slideshow. Just about myself and okay. We were at, so I explained about how many contracts we trade, what do we look at, what instruments, multiple instruments, anticipate, confirm, execute is key to every single trade call I make. All right. This is me back in 2006, 2004,
Can everyone still hear Simon? Okay, Simon, we've lost your audio. Hang in there, folks. Today must be tech difficulty day. While we're waiting, I'll let you know, can everybody look and see if you have access to Simon's handout? We haven't lost his picture, so I'm thinking we can see it. Okay. So you just have to look under your handouts and you be able to click on that link and get his handout and be able to catch up with this, because his trial is very, very awesome. There's quite a few people who have taken advantage of that. I know that it's been a help to them. So Juliana, you need to contact Simon, and I'm sure he'll get those charts or get you into his Telegram. And Randy, if you can email that question to Simon, I'm not sure he saw it. Okay, just a second. It looks like he's coming back in. Oh. You're with us, Simon? Oh. Your
This is
mic.
my
Okay,
second
now I
option.
can hear you.
Can you guys hear me okay here?
Yes, now we can.
Okay, I
So,
lost on my one computer, and the other computer, if you can give me access to this quickly.
okay, yes, just a second.
I'm sorry, guys. I don't know what happened. I had technical issues this morning, and it continued. In any case, please do me a favor. I'm sorry I could not continue with this, but send me here. I'm going to get to.
Simon, I
I'm
was
here.
just telling everybody to get your handout that's there and to send you their questions. We did have a couple of questions for you, but you still have 5 minutes left.
Okay, so folks, this is the second access. This is my side computer. Maybe this interruption would be good, because now on my side computer you can see the other stuff that I look at, CFDs. Folks, I also look at CFDs. This is the NASDAQ CFD. This is NAS 100. This is not allowed in the, I mean, Americans cannot trade CFDs, but anybody else around the world can trade CFDs. I heavily depend on the CFDs for my levels. This is the NASDAQ. This is the ES, E-mini S&P. This is the gold. As I mentioned, the gold has a rejection coming up on the top possible. Silver, oil, UK oil, US oil, okay? Everything. Now, probably I could not see your questions. I don't know if there's any questions now for me that I can see it. This is a different access. But as Sherry mentioned, please go to the website, request a trial. How to get those charts. Juliana, just please send me an email, join us, go to the website, contact us. If you go to About Us 2005, this is Ontario. Give me a second, folks. Just a little bit blackout here. Green. Test. All right, so contact us, please. Here, contact. Email
Hello?
me, email my members. Everybody will be happy to help you. Randy, thank you. You're a trial member. Yes, Randy's saying, if you folks can see Randy's questions. Trial is awesome. I appreciate it. Randy, yes, thank you, man. One more thing, after my trial, I want to sign up. Do you guys offer payment plans? Yes. Yes, we do offer payment plans. Yes. So any further questions, please, anybody? We still have technical difficulties. I'm sorry about this. I'm deeply sorry, but please join the trials. You will tremendously enjoy the trials and the charts and everything. Thanks, everybody. Again, I have to apologize.
No apology necessary, Simon. Really, it was a great presentation. The handout is there where everybody can get to it. for the whole time, for this whole webinar. Everyone who has questions, any other questions, please just email Simon. I'm going to tell you, he gets right back to you, and you're not going to regret it. So
Thanks, Sherry.
today
Thanks,
just seemed to
everybody.
be like one of those days where we just had to persevere.
Absolutely, indeed. Thank
Have a
you.
good day.
Thanks for your
Thank
patience.
you. Have a good day.
Bye now.
All right. All right. I know it wasn't ideal, everybody, but we're going to just make the best of it, and we're going to go on with our next person. Jody is in the house. I just want to give you a little bit of background for that. She's going to be talking to us. It's Jody Samuels of FX Traders Edge, and she's talking about simple tools for big move trades and getting funded. And Jody Samuels is one of North America's leading trading coaches, sought after speaker, and author of the acclaimed book, The Trader's Pendulum, The 10 Habits of Highly Successful Traders. She mentors traders on developing proper trading skills and habits so they're better equipped to navigate the markets. Her trading expertise spans the financial, currency, and commodity markets. And as a former trading professional for U.S. global investment bank JP Morgan, and a sales professional for an energy company, and now CEO of FX Traders Edge, an Elliott Wave sign-based training company for traders. Woo! Jody, welcome. Thank you so much for being with us. You're self-muted right now.
Thank you, Sherry.
Now, do you like to take questions on the fly, or do you like us to hold them for the end?
Well, I can keep an eye on the questions. If somebody has a question, they should ask it. I'm allowed to, I can see it in the chat, and then I can just answer.
Okay, let me just do one more thing. I want to let everybody know that we are recording this session. You can get it at tradersexclusive.com/archived_webinars. And this slide that's up right now shows you what it looks like and all of the dates for our next webinars. And we just, whoops, I just tend to scroll a little too fast. But anyway, just wanted you to know that. And then let's see. There's Jody. And I'm going to turn it over to you. I'm going to make you the presenter, and I'll give you organizer so you can see the questions as they come in. And that way, if you do interaction at all, you can actually get feedback right away.
Oh, make sure you can see my screen.
Yes, ma'am. Simple timing tools for finding big move trades without risking your capital. Yay. All right, I'm going to be quiet now, and you take it away. Thanks for joining us.
Okay. I'm just looking to see the chat function to make sure I have it up. All right. Well, I just want to thank you, Sherry, for organizing this. I enjoy speaking at your events about trading subjects that I'm very passionate about. And this talk is about simple timing tools for finding big move trades without risking your capital. So we have a funding program. I like to start with the disclaimer. Please read it to yourselves, and thank you. We're going to talk about this at the end. This is me speaking at Harvard on my book, The Trader's Pendulum, The 10 Habits of Highly Successful Traders. This book is really about my trading experience, but it is a nuts and bolts guide to setting up a trading business. Now, one of the things that I talk about in my book is called the trader's pendulum, the market pendulum, the financial pendulum, and the emotional pendulum. As traders, you know that some of these, the market, the financial, and the emotional, they are all tied together. I used to say and treat them separately, but they're really interwoven. They're linked together. So the market pendulum is the volatility in the market, and the market moving up and down. Sometimes it moves up and down like a yo-yo. Sometimes it trends. Sometimes it's sideways. the market pendulum is about catching the trends and understanding the corrections. And that's why I like to look at the market cycles, which I'm going to show you shortly. The financial pendulum is about making and losing money. As traders, we make and lose money, but the key is not to bet the ranch on any one trade and to get our stats in order, our performance metrics, so that the size of the wins are larger than the size of our losses. If they're not, then we have to have a pretty good ratio of winning trades to losing trades. And then the emotional pendulum is about our emotions. And I'm going to show you a nice chart which illustrates that right here. And this is the 8-wave market cycle. When the market moves up in 5 waves, this can be an extended move as well. This is basically the trend on your left. And then we reach a point T, and this is when traders and investors tend to have FOMO, fear of missing out. So if a stock is moving up, for example, or a currency, traders experience greed, optimism and exuberance, and load up at the top. And then what happens? The market corrects in an ABC fashion, a 3-wave move. And at this point, if you haven't gotten out up here, or if you've bought up here, then at this point, traders, investors are bailing. They're experiencing fear, panic, and discouragement. So what we're going to do today is to show you how to avoid this. And it really is about training the brain and having a system and understanding what to look for when we are up here so that you don't get caught into buying up here. How many of you have bought at the market top and then wondered why you did it and then second guessed yourself all the way down? Yeah, exactly. So what we want to do is we want to take profits up here or sell. If we're long, we want to sell. We can even go short. Warren Buffett said, be fearful when others are greedy, be greedy when others are fearful. This is the contrarian view. And if we can just understand what that means and keep it in mind when we are accelerating and continuing to move up, then we might not get caught in this market frenzy, because the market is based on traders and investors' emotions at the time. So when we are continuing to move up, there is a frenzy at the top of the market. It's FOMO. Traders just don't want to miss out. So what we're going to do is I'm going to show you a simple tool, end of trend trade setup, and how to identify the end of trend. Get out near the top when others are buying and get out when others are selling. And we have developed a tool, an automated tool to find these setups. It's really very fascinating. I'm very excited about the work that we've done recently to find these trade setups. And then at the end, I'm just going to show you how to join the Wavy Tunnel Pro and get funded. Okay. This is important for you to know because the markets are getting complex. It's more volatile. Emotions are the Achilles heel for traders. You need a system that removes the emotions. You need to filter out the bad trades. And if you're planning to follow trade recommendations, why not get a foundation first? Finally, your capital is likely limited. So if you blow up your account, you might not get a second chance, which is why the funding program is so great, because you can blow up someone else's account. Kidding. Hopefully you'll make it work. So what process do I follow to give me confidence as a trader to pull the trigger and manage my trades? Let's get to it. Just the overall system that I use, just to give you an idea. First, I look at the market map, which I've actually shown you. I showed you the 5 waves and the 3 waves. I like to see where we are in the market cycle and if we're still in trend or if we're part of the correction. So that's my brief analysis that I do. And I like to stick with it. If we're in a trend, a strong trend, I like to stick with the trend and just buy on weakness. And if we're in a correction, I like to sit back and maybe even sell on strength. The strategy is what we use to get into the long position if we're in an uptrend, or get into the short position if we're in a downtrend, or show us when we're at the top of the market and we need to get out. And that's what we're going to talk about today, the strategy that we can use to do that. And then finally, trade management is really important, and optimal risk reward is very important. This can really make the difference between a successful trader and a mediocre trader, the trade management piece. And well, I guess we will talk a little bit about that if we have time. So on the left, we have the market map. I call it for the Wavy Tunnel Pro because that's our system and strategy that we use, where we have the trend move and then the correction. And here we have the moving averages and the awesome oscillator. So this is the simple Wavy Tunnel Pro setup. Simple the moving averages with the awesome oscillator. And this tells us when we have divergence in the awesome oscillator that the market is running out of steam and that we could be closing in on a top. And this is an ideal looking setup. This is definitely in an uptrend when these averages separate from the longer term averages. So we see the gap getting larger and larger. And this is the point, wave 5, this is the point at which maybe we're ready for a correction. And the market fools us. The market can move down and then start to head back up again, down, head back up again. And at this point, traders are thinking we're going to make a new high, we're going to the moon, I'm going long, blah, blah, blah. And then what happens? We turn around and we come down in a vicious wave C, which we have experienced of late in many, many markets. So this is the simple 1, 2, 3 reversal end of trend trade setup that I want to talk to you about. And then we're going to look at the tools. This is called the 1, 2, 3 bottom, when the market makes a move up, and the 0.1 is the low on the visible chart, makes a move up, we label that 0.2, and then the market moves down, we label that 0.3. And if this is the point at which wave 3, this 0.3 can either make a new low, in which case this pattern is no longer valid, or price continues to move up and takes out this 0.2 and we enter here. You can also enter on reversal candlestick pattern at 0.3, or you can enter on a break of 0.2. Then the market moves up, and there are 1, 2, 3 internal trades all along as the market is moving up. Then we get to the market top, and 0.1 is the high on the visible chart. 0.2 is when the market moves down. 0.3 is when it moves back up without making a new high. And this is where we want to train our brain to think, if we start to come down and get a confirmation when we break down below 0.2, we want to be selling. We don't want to be thinking we're going to be making a new high. And it really is a question of training our brain. It really, really is. And if we make a new high, so be it. And that's where a lot of the repainting comes in, because whatever you have up here will move to the right. And that's fine. We could make a new high, and then the market can go through the same 1, 2, 3 reversal pattern. We just have to be aware of that. Okay, well, I'm seeing, if you can't see the slide, the screen is white, it's not black, then you might have to log back in again. Somebody just said they couldn't see the screen. So this is an example showing the 0.1, the 0.2, and the 0.3, and the breakdown below 0.2. The typical 1, 2, 3 target is the length, the distance between 0.2 and 0.3, projected on the breakdown point of 0.2. So what I like to say is that's your first target. You want to lock in some profits. So that's your first target, and then you can trail the rest. And this is part of trade management. You want to have more than one position. Why? Because if you have only one position and you get out here and the market continues down a long way, you've missed a very big opportunity to capture the move down. And that's why you're selling to begin with. If you take 2 positions, then you can take profits on some and move your stop to a reasonable level, maybe even to break even, and then you can capture more profits. We've got to be proactive as traders and really try to maximize the profits that we have and minimize the losses. And then profit too, like I said, can be trailed. This is exactly what I said. What happens at the market top? At the market top, we also have divergence. So when we combine this 1, 2, 3 reversal with awesome oscillator divergence, that's a bonus. We can also look for a reversal candlestick pattern. This is a nice engulfing pattern. And then the market moves down, it comes back up without making a new high, and then boom, it breaks down. So we like to combine the 1, 2, 3 with awesome oscillator divergence. This shows us that the market is running out of steam. Let's look at Apple. This is an hourly chart in Apple. Same story. We have divergence, awesome oscillator divergence. 0.1 market top, 0.2 sell the break. Now this is a very strong candle moving down, and we trade sideways. So sometimes 0.3 doesn't retrace as much, that much. And that's because the market, it had a very, very strong candle moving down. So the market is looking to sell. Like you can look at the candlesticks here. We have long tails and small bodies, long tails to the upside. So this signals that perhaps there are more sellers than buyers. And then of course we break down. This is another example, Charter Communications. We have triple divergence here. What's better than, or double divergence? Triple divergence. Well, what's better than divergence? Double divergence. I guess it's double divergence, where price makes higher highs and the oscillator makes lower lows. 0.1 is the market top. 0.2, you sell the break. Once again, the market was really, really anxious to sell, and the 0.3 didn't retrace very much. Now, you would take two positions or 3 positions, and definitely take profits when you have initial profits, and then trail the rest. And then TSN, Tyson Foods. Here the market has traded down. We have divergence. Again, the market is bullish. We have strong green candles moving up, and then the market moves sideways. So there are different types of corrections. This is a sideways correction. Sometimes we will have a steeper correction where the 0.3 will be down here, but the markets that I showed you have sideways and shallow corrections, which is still fine for a 1, 2, 3 reversal. We have divergence here, and then we buy the break at 0.2. This is a currency pair, the New Zealand, Canada, and this is an example of where 0.3 is almost makes a double top. So we have 0.1 up here, and then the market trades down, 0.2, the market trades up in a nice 3-wave move, 0.3, it double tops, and then we come down and we sell the break. So you can sell when we break down at 0.2, or you can sell up here on a reversal candlestick pattern, maybe over here on this breakdown with a stop above the highs. You can do that as well. And of course, look for the divergence. So let's look at this with new lenses now. I showed you blank charts with just candlesticks on them and the price action. Now I'm going to show you the same charts with our wavy tunnel indicators on them, and I'm going to show you how that sheds a whole lot of new light on what we're trading. And I'm also going to show you our elite tool, show you how we can be notified when we're near the top when others are buying, and get in when others are selling. So the first thing that we do is we scan for a purple or a gray arrow to start. Purple, it can be an arrow or a dot on different platforms. We display it differently. The purple is the biggest swing move. The gray is the next one down. So when we look for the purple, that's going to be the supposed top or bottom of the market. We look for divergence. We wait for the 1, 2, 3 confirmation to take the trade. And it's a bonus when we have a trend line break. So our software also automates trend lines on the indicator, on the charts. So we're going to look at the same examples that we looked at before. This is Apple. We have the purple diamond up here instead of an arrow. This was just the price action chart up here, but this gives us a clue that the market is not only running out of steam because we have divergence, but we have the purple diamond up here, the purple diamond. So that's our first clue that maybe we are at a market top. Then we have the same 1, 2, 3 reversal that I showed you up here with the price action. But look, the wavy tunnel setup is just beautiful because we have the wave moving up and separating from the tunnel, and the gap is getting larger, as I explained. And this shows us that we're in a very, very strong trend, and that when price breaks down below this wave and through this trend line, and this is automatically drawn on the chart, when we break down through the trend line and through the wave and through the 1, 2, 3 reversal, we're looking for an initial move down to this level. And usually we go lower and we get a gray arrow or a gray diamond, as this is. So we can also set targets using this wavy tunnel setup. So this is telling me we are at a top or close to a market top. Now, if we just trade down in here and start to make a new high, then this trend will continue. That's why with the 1, 2, 3 reversal, we want to make sure that price moves down and then it moves sideways or retraces a little bit and then continues on down. So this is, for me, I look at this setup and I just see the magic happening. It's like a movie being played in front of my eyes. Yes, I like looking at the price action, but I love looking at the wavy tunnel setup with the price action because it shows me the market cycles and patterns just so readily. Let's look at the next example, charter communication. So on top, we have just the price action. And notice here we have a gray diamond instead of a purple diamond. That's because the purple diamond occurred down here. And this was a downtrend where the wave separated from the tunnel. We had a separation, a large separation down here. And then price started to move up. So this I call a correction. And when we have this gray dot, that's also a potential sell for a market low because we don't have divergence here yet. We call this the end of a trend, and then we move back into this price territory. The wave comes back to the tunnel. We get a gray, and this tells me once we have a trend line break and we have a 1, 2, 3 reversal, and we could also have divergence here, and we start to trade down, we are looking for a new low. And we can set this as our initial profit target, but that's what we're looking for. So again, we want to set at least two positions so we can take advantage of the move. Here we do have a purple diamond. We have divergence. This is a downtrend. And then we have the 1, 2, 3 reversal, and the market continues to move up. This is where we have divergence and the market continues to move up in a change of trend. So now we are in an uptrend on this market. And then this is the New Zealand, Canada. Here we have our price action up on the top. And this also tells me that we had this is a swing move from gray to gray. So this is our gray arrow. And the gray arrow is one level down from the purple arrow. We have a double top here. We have a trend line break. We have a 1, 2, 3 reversal. we are looking for a move lower. So scan for the purple arrow to start. Ask yourself, is there divergence too? We can also scan for the gray. And then we have a multi-time frame indicator, which we have on the charts to confirm the market reversal. So not only do we have the purple arrow here, but we have the white dots on 3 different time frames, which this is telling us that we are in a market reversal point for 1 time frame lower. Okay, and we also have the trend line break. So we have our 1, 2, 3 reversal, and we have the trend line break. We have our purple arrow, and we have divergence. We have divergence. So once you put all of these 2 little steps together, you get a nice roadmap for taking trades and finding the end of the trend. So this is another example where it's just it's the Aussie Canada. It's an hourly chart, I believe, or maybe it's the 4. I don't remember. Scan for the purple arrow to start and look for divergence. So we have the purple arrow and we have divergence, and our software tells us where it scans for the purple arrow, by the way. So then we could look at a bunch of charts and see where we are with that. I'll show you that in a minute. And then these trend lines are automatically drawn. They're right, they show up, they're right on the software. So, and when a trend line breaks, you get this red arrow and the yellow arrow. The yellow corresponds to the yellow trend line, the red corresponds to the red trend line. And then this yellow arrow horizontal shows us that our initial profit target is met. So this shows up right on the charts. Now you can't really see a 1, 2, 3 reversal here. You'd have to go down to a smaller time frame to see it, because the market moves up, it does come down, but it's literally 1, 2, 3 candles. You'd need to come down to a smaller time frame to see the definition of the 1, 2, 3 reversal, which would take place right over here. This would be the buy. Now, this is the multi-time frame indicator, the 3 dots. So this is the hourly chart. 1 time frame higher is the 4-hour, and 1 time frame lower is the 15-minute. This shows us right on our scanner that we have 3 end of trends setting up. And that it interests me, because then I can take a look at the market and I can say, are we ready to turn around? And I look for the 1, 2, 3 reversal to take the trade. And this trade can be very, very successful. We can also make a new low and repaint. This will move to the right. So that's why we like to use the 1, 2, 3 reversal and look for the divergence, and maybe look for a reversal candlestick pattern and look for the trend line break. This is what our scanner looks like on MT4, and these are all of our trend line breaks and our breakout 1 and our breakout 4 trade. I'm not going to go into this, but you can set this up as you like. You can select the time frames. You can choose the instruments, Forex, stocks, commodities, and cryptos. It's customizable. Day traders might want to look at the 1 minute, the 5 minute, and the 15 minute. Swing traders might look at the 1 hour, the 4 hour, and the daily. Position takers might want to look at the 4 hour, the daily, and the weekly, and look at the scanner for setups, define your trade plan, and go. What I find is that many traders don't have a trade plan, and I'm insistent on a trade plan. A trade plan tells you where you're going to get in, where your ultimate profit target is, and where your stop loss is. It's really important not to wing it in trading. Yeah, you can have intuition and decide that the market is in a trend, therefore your intuition is telling you that you want to buy on the dip, and that's called momentum trading / day trading. That's fine, But if you're taking swing trades or position trades, I urge you to have a trading plan. It's not, if you're thinking that the market is going to continue to go straight up, it's not. The market is there to fool us. And that's why we need to be prepared, where we just need to be prepared for market turning points. And that's really what I'm trying to discuss with you today, and how you can look for the turning points. Some of the other things to look for if you do use a basic moving average strategy is when we are at a market top or a market bottom, you will see price stretched from the moving averages. So you will see the candles far away from the moving averages. And you've got to know that at some point, the price is going to catch up with the moving averages. We're going to come back to the moving averages. That's just what happens. So when the market moves up in trend, it breathes, price comes back. And then it goes up, price comes back. And when we're in for a deeper correction, that's where this strategy comes in handy. So there are many, many trades to take. Okay, you can go with the trend, and you can go with the trend, and you can use this strategy if you're long and the market is moving up to make sure you get out when the market is ready to turn around and correct. And you can always get back in again. So just review. This is a simple 1, 2, 3 reversal strategy. Now, the other thing that you can do with this strategy, I'll just talk to the trend move. You can buy on an internal 1, 2, 3. So this is the beginning of the move, where point 1 is the low of the chart. But then we move up, we enter here, we move up again, we come back. This is another 1, 2, 3 area to enter long for the trend. And again, all we do is draw our horizontal line across this top, and if we break out above it, then we're probably going higher. It's when price comes down and then moves up and doesn't take out the price high that price moves lower. So this is a really, really good strategy to use so that you're not getting in too early. Like, how many of you, I don't know, would sell pick a top and sell over here, let's say, take your profits down here and be very happy because you went long here, and then the market moves up and you're kicking yourself because you've given up all of these profits. And then what happens up here is that you get in again because you have FOMO. You see that you missed the boat. The market has moved up and you got out over here. So you want to get in over here. And then what happens? The market comes down and you lose money. So it's really all about trading the brain. And think of it as, you remember the game Hot Potato, where you pass around the potato and the one holding the potato, the last one gets burned? Well, think of the hot potato being up here, and you don't want to be the last one to hold the hot potato. So you want to get rid of the hot potato and pass it on. And that, by doing that, we're getting out of the market at the market top. Now, you don't have to get out up here. You can wait and get out once the market is confirmed that it is turning around and moving lower. Now, I would love to answer some questions, but I really can't see any questions. So I just can't see the questions. So I apologize for not seeing any questions.
I made you the organizer. You may have to pop out that the questions. There's a little questions module. Can you see that?
Okay, now I see it. Okay, great,
cool.
great.
Awesome.
Okay, I had to open it up. I didn't.
Yeah, it's very tight. So if you guys have any questions,
nobody has asked any questions.
Okay.
Okay, so that's fine. So let me continue. So this is the 8-wave market cycle. And we want to train the brain and be fearful up here, and we want to be bailing. And down here, we want to be greedy and we want to load up. Just a little bit on trend moves. When we are in an extended trend, usually it's the wave 3 that is extended, so we can have another 5-wave sequence within the wave 3, which means that just because I've put the ideal 5 waves up here, you might actually count 9 waves in an extended move, or 13 waves in an extended move, or 17 waves in an extended move. And all you do is, when you get to the end of the 5 waves and the market comes down and moves back up and takes out that wave 5 high, then it's likely we're going to 9 waves. So we're going to move up a bit to before we find another top, a market top, okay, for a move lower. So at point T, once it's confirmed and we have the 1, 2, 3 reversal, the market moves down and then the market moves back up. This is a trap. This wave B is a trap. Don't get caught in the trap thinking that you want to buy because we're going to make a new high. That's a trap. Because if we don't make a new high, then the market comes down and you're long here, you're going to be panicked down here. And we want you to be greedy down here. We want you to load up down here. So the other way to think about this is, don't buy here. Wait for the market to make a high and then buy on the retracement. That's another way, so that you don't get caught in case this is a trap. So let me talk a little bit about the wavy tunnel and getting funded now. All of these setups are based on trading psychology and the 8-wave market cycle. This is really a master's training in understanding how the markets trade in cycles, and use our proprietary combination of cycle high and low indicators with momentum indicators to warn of market tops and bottoms. Learn how to track short-term and long-term trends with precision. This works with stocks, futures, ETFs, Forex, and cryptocurrencies, and it works for day, swing, and position trading. And find precise entry points for option strategies as well, for those that trade options. And embrace the suite of professional tools to trade like a pro. So we give you, this is a program, and we bring you along in the program. We teach you the 6 wavy tunnel setups. We teach you how to use the elite tool. We have all of our trade plans, and you can use these setups. We have a trading room. Well, let me tell you a little bit more about it. Join me in the Wavy Tunnel Pro 5-day accelerated trading and mentorship program. If you join now, you can start now, and then I'm going to be picking up with 5 days of coaching in March. So we have 5 days, and everything will be recorded, but the course material is online now. The coaching is so that I can answer your questions. I can show you the latest and the greatest. We can look at the tool and use it together. You can come into the trading room. That's what the coaching is all about. The coaching starts March 27th. This is our flagship trading program. This is my personal system to achieve consistent profits in any market. I personally trade stocks and options currently. I did trade on Wall Street. I started as a Forex trader. So we do have a Forex trading room, and we cover all asset classes. Let's just talk a little bit about the funding program. Do you want to be a professional trader without risking your own money to get there? With this opportunity, we are inviting you to be a trader and not just someone who trades. This is for you if you're ready to learn a system that will help you consistently profit and will help you create a healthy mindset for trading. Now, this funding program, it's really, no matter where you reside, you will be able to trade Forex, cryptocurrencies, stocks, about a basket of 100 stocks, and CFDs, so all the stock indices on the MT4 platform, on this platform, no matter where you live, even if you live in the US. That's how we've set up this funding program. So you'll be able to trade all asset classes on the one platform. Now, these are the rules. Step one is that the trader qualifies, and you have to generate 10% profit in order to qualify. And then you can't lose more than 2% in one day, or 5% as the max drawdown, which means that you really have to limit your risk so that you don't exceed these daily loss and maximum drawdown percentages, because if you do, your account will get reset. So 10% profit, and then you get participate in live funding and share in 75% of the profits. You've got to put in a stop loss. That's a must, and you have to flatten positions for the weekend. You're allowed to withdraw once a month. And again, you can trade Forex, crypto, CFDs, including stocks from the platform. So on this website, we're offering you actually 3 different size accounts: 25,000, 50,000, and 500,000. And I'm going to show you that in a minute. And what you get is you get the education, which really, it's really fine education. Like, all of the students that have taken this program are just really happy with it and are using it for whatever they trade. So the bonus is 1 month access to the scanners, wave counts, trade alerts, and trading rooms 4 times a week. And there are various renewal plans from $59 a month, plus funded account, depending on which package you choose. So we have a few different packages. These are them: the starter, the pro, and the platinum. The starter gives you 25,000 in funding, the pro 50,000 in funding, the platinum 500,000 in funding. You find this on wavytunnelpro.com. That's the website. I'm just going to post it. wavytunnelpro.com, and you can decide what you want. Which package you want. You get all of the education, and then of course you get to join me in March for the 5-day accelerated training. So read the sales page, see what you get. I'd love for you to join me. It's a fabulous program. And like I said, the accelerated coaching starts in March, but training starts immediately. So I'd love to answer questions now, but I don't see any questions. Do you see questions, Sherry?
So folks, now is the time. Jody's only got 4 minutes left to be able to answer your questions. If you have questions, type them in now. Jody, I have a question for you. I posted a link, and I think you did too, but I just want to be sure which one they should go to. I had wavytunnelpro.com/funding-program. Is that the wrong one?
All right.
Sorry about that.
It is that page, but yeah, it's wavytunnelpro.com. We forwarded it to that page. Sorry.
Okay, good. Great. Perfect.
To make it
So
easier.
does anybody have any questions? Jody, this is probably a first, because that means you did everything perfectly.
I don't know about that. But if anybody does have questions, please email me at jody@fxtradersedge.com, and I will answer you straight away.
Jody at FX Traders. Wait a minute. Say it one more time.
Jody@fxtradersedge.com.
Okay. And I just put that in the chat. Does it look right? fxtradersedge.com. I think I did it right. Oh, here we have a question for you. What do you need to qualify for real money trading? JT, are you asking about the size of your account? Like, are we talking about, do I need $5,000 to qualify for real money trading? Is that the question you're really actually asking?
Okay, well, I'll answer it. Let me just go back.
Okay.
In case Okay, so the
No, he
price
says what performance is required.
You're right. Okay. So 10%. You make 10% on the demo account, and that qualifies you for the live funding. You've got to make 10% of the account. So if it's a $25,000 account, it's $2,500, and then you get the funding. If it's a $50,000 account, it's $5,000.
Cool.
You have to show that you can make that. Okay.
Super interesting.
Do you
Thank
want to
so
post
much.
wavytunnelpro.com for
I
everyone?
did. Yep, I
Yeah.
did.
Okay.
Yep.
Okay.
And so, but then to be able to click on it, https://wavytunnelpro.com. And I keep putting the C before the but I think I have it right now. So that would be the link you guys need to check on. And
there is another question, if I could
yep,
just answer that.
please do.
So JT, the performance is 10%. There is no time limit. There is no time limit. You just have to be able to take a trade within 2 months. I think it's 60 days. Like you have to take at least one trade, or 90 days, I think. I'm not sure on that, but you can't let it be dormant for more than 2 months.
Look at that. He said,
Okay.
thanks, super session. Perfect. Can I do
You
futures?
can you do futures? Yes, because the Forex trading platforms has CFDs. So it's not the futures contracts like you're used to, but it will be the same futures instruments expressed on the Forex trading platform. So
Perfect.
you can trade the S&P, you can trade all these things on the Forex trading platform. And if you have any more questions, please contact me, Jody at fxtradersedge.com, and I will be glad to help you out. So thank you so much, Sherry. Thank you, everybody, for being here. It's a real pleasure. See you again next time.
Thank you, Jody, and thanks for your flexibility for our little bit of running late today. Thank you very much, and I hope to see you again in the future.
Thank you. Bye-bye.
All right, you have a good day. All right. We have our next presenter in the wings. Don't forget, we are recording this session. You can find it at https://tradersexclusive.com/archived_webinars. That's where we post all of them, and all of our recordings, as well as the dates for our next events. And then next up, we have our good friend Norman Hallett of The Disciplined Trader. He's going to be talking to us about the real reason most traders lose and how to fix it. That's probably the best news everybody ever heard. I just wanted to introduce Norman. He's been a trader and trading educator for over 4 decades. He's done everything from running one of the largest options firms in the country to being an options specialist for Payne Weber. But if you ask him what he's most proud of, he's going to tell you it was being the torchbearer for modern trading psychology. From his 4-minute drills for traders with over 2 million views, to his books on how to build trading plans, he's dead set on getting traders to make trading psychology a trading priority. And I mean to tell you, mindset is everything. So welcome, Norman. Thank you so much for hanging in there with us and readjusting your schedule. And I'll be quiet now and you can take it away.
No problem. Thanks for having me, Sherry. And I before I get started, I want to say that this lineup is great. I've worked a lot with Jody, who spoke before me. We've done a lot of things together and so on. I always meet her when she's in town. I think her mom lives down here in Florida, where I am, and whenever she's there, we always get together for lunch. But I have to tell you that there's a woman who is dead set on making sure you understand things before you start risking money. If you ever looked at if you've looked at Elliott before, it can look pretty confusing. I mean, some of those charts, she simplified some of them and they still look confusing. But the truth is that there is clarity to them when somebody explains it to you, and there's nobody like Jody that does that. The other thing I wanted to say is that funded accounts. There are a few companies that offer that, but none that she only has one hoop you have to jump, and that's that 10% hoop on the sim account to show that you can do it. Most have 2 or 3 hoops to jump before they'll give you funded money. So if you can learn what she's doing, be controlled enough to do that, and then I think your path to the funded money is the easiest I've seen. Look, nothing's easy in trading. In fact, all right, let's get on to me. Enough about Jody. And the guy that follows me is probably the hottest trader in the country. Passarelli, I met him years ago in an expo when I was speaking. He spoke after me as a new kid on the block. He had a small booth, and we had a couple of conversations. Here it is about 10 years later, and he has really he's proven himself through his performance. So after I'm done, listen to Passarelli, because he really knows what he's talking about too. So great lineup. Now let's talk about your conscience. I am your conscience, and I'm not here to really present to you where to buy and where to sell. I'm here to tell you that you may have a pretty good trading plan right now, and you may take advantage of the trading plans that are being offered on this series and other series that you may be attending. But it's not going to do you much good unless you can control yourself, and that's where that's where all traders, or 90% of traders, have issues. And I'm going to get into that today. But let me show you the agenda. First of all, we're going to cover who will benefit. Then we're going to cover why listen to me. I'm going to talk about my promise to you. I'm going to answer the question, do 90% of traders really lose? And if that's true, why is trading still so popular? And what is the answer to all this losing? And I'm going to show you that if you want my help, I've got something really that that has proven to help thousands before you, and may be able to help you. I'm sure it can. So let's get into who will benefit. Most traders fall into 3 different categories, and I'm not counting the 10% of consistently winning traders. I'm talking about the 90% that supposedly are losing or at best going sideways and spending their valuable time getting nowhere, which is about a 10% of that 90%. But this is a person who keeps on blowing out their accounts. I ran a poll recently. I run them every year, and the answers are pretty much the same every year. And the multiple choice is, how many accounts have you blown out? 1, 0 to 1, 2 to 3, 4 or 5 or more. Well, the bottom line is that 70% of traders that get to the point of doing something about their mental and emotional control have already blown out 3 or more accounts, and 40%, this is what shocks me, last year was 32%, the year before 40%, 5 and more blown out accounts before they decide to do something about the real key. Okay, this is the second. This is what I call this person the rooter. This is the person that puts on a trade and then roots for it and sweats as the market gets to the stop and doesn't quite hit it, comes back, they feel much better, and then it comes right back and hits the stop. The sweater, the rooter. And then there's the individual trader who has had some success and has some failures, has some success, has some failures, maybe in the beginning blew out an account or 2, but now is kind of trending a little bit too scared to put on more than a couple of positions, but and yet they still want to be in the game, but they're being cautious and they kind of go sideways. These are the people that are suffering, and the rumor is that it's 90% of traders. So who will benefit? To be clear, these are futures traders, forex traders, shares, stock traders, option traders, bond, day traders, and swing traders. All kinds of traders are victim of of these kinds of issues that are causing problems in their performance, and position traders are really included. So why listen to me? Well, I've written a book. That doesn't really mean you should listen to me, but there are some people who have spoken on other venues and so on that read my book and are going by some of the rules that I talk about on how to design and construct an effective trading plan. In fact, Jody talked about the importance of a trading plan. And so I've written a book there. I think if there's any critique on the book, it is that the first three, it's still available on Amazon as well as some of my other stuff. But I spent the first third of the book talking about how you need to analyze yourself before you can construct an effective trading plan. This is why when trading plans, when you see somebody with a great trading plan or your trading partner tells you about it, give me a trading plan, they lay it all out for you and you lose, it's because that trading plan was built for somebody who could run a trading plan like that. Maybe it has a lot of action and you're not really action oriented, or didn't have a lot of hoops to jump, but you need to see more confirmation. You need to have a trading plan that fits who you are. It's a book I wrote on inspirational quotes from the disciplined trader. Really, that was taken from my 4-minute drills. This last piece right there of me with my hand up is a 4-minute drill for trader, of which I've recorded over a 4-year period, over 200 of them, did them every weekend for 4 years. And that inspirational book was somebody took some of my quotes from those talks. It's more of a coffee table book, but traders open it up and they kind of read a sentence and get inspired before they start to trade. So I'm here to be your conscience. I'm here to be your answer to why you keep banging your head against the wall and not getting any place, no matter how good a trainer and system that you're running. Okay, so yeah, I think there's an expression that you can judge somebody, or you can tell who you are, or by the people that you're hanging around with, and that if you're hanging around people that are doubters and strugglers, then that's probably why you're doubting and struggling. If you hang around winners, then you're going to be pushed toward winning. And here's a bunch of winners that I've hung around with. In fact, I invited all these traders to my, I did a webinar, a live presentation years ago before COVID, and all of these individuals were there. Hubert Centers, you recognize the mustachioed gentleman who is the purveyor of candlestick charting. There is John Carter, and Mr. Pivot Point himself. And this is just a picture of me congratulating John Person, that last person. Steve Nissen was the person I didn't mention with the mustachio. These are all people who are very successful in the market, and they all support the idea of getting your head together, and it's why really they're all successful, and why possibly you should be listening to what I'm going to tell you here. What's the promise? The promise I'm going to make you for this short presentation is I'm going to show you exactly why 90% of traders lose, but I won't leave you there. I'll show you several studies from around the world that prove that what you've always heard, 90% of traders lose, is true. I'm also going to tell you that it's not your fault until the end of the presentation, and that will be your fault, but I'm going to show you exactly why trading firms de-emphasize the truth and emphasize the dreams of riches. And I'm going to show you how you can end the losing and frustration, turn the tables on the industry, and start trading successfully in 2022 with probably the trading plan you already have or that you're about to commit to. Again, the issue is usually not your trading plan. 90% of the people that come to me have a pretty good trading plan. Pretty good is all you need to make money. So no more making needless trading mistakes that result in huge drawdowns. No more sitting there tensely rooting for your position, but instead you'll have confidence in your outcome, and no more doubting that being a trader is really right for you. That's the real hurt, when you sit down and say, I don't even know if I should be doing this, because your results are going to be proving that you can do this. Most, in fact, I would say 95% of you at least, if not higher, have the capability and the intelligence to be a successful trader. but it's the controlling of emotions that makes the difference. Okay, let's talk about the question, do 90% of traders really lose? And I'm going to show you 4 studies. The first study is from the North American Securities Administration Association. 100 years ago, small group of state securities regulators had a big idea: form a network of colleagues to work together for the protection of investors throughout North America. And today, that group is made up of the securities regulators from the United States, Canada, and Mexico. And together, we, or they, are, this is their statement from their site, we are the North American Securities Administration Association. That's the largest study I'm going to show you. There's another very large study from the European Securities and Market Authority. And these people are an independent European Union authority that contributes to safeguarding the stability of EU's financial system by enhancing the protection of investors and promoting stable and orderly financial markets. Very similar to the SEC and what the North American Security Administration does. And then I'm going to show you something a little different. Spain is very on top of protecting their people. They passed a law a couple of years ago. I'm going to show you what the study was that resulted in that. I'm going to actually show you the law, which is a reflection of that study. It's a body that's responsible for the supervision and inspection of Spanish securities markets and the activity of all of those involved. And then I'm going to show you the last one, which is not seen a lot, but I probably give this the most credibility because this is a Brazilian stock exchange. 3 individuals that were approaching the question: if you're day trading for a living, maybe you shouldn't be. And Fernando, Rodrigo, Bruto, if you're a Brazilian trader, you know exactly who these people are. They're some of the top traders in Brazil. This study was done 2 years ago, and well, a year and a half. And it is stunning what they came up with. And what I like about this study is that they were they didn't inspect accounts that weren't at least trading for 300 days. So these are people that really tried. These were people that opened accounts, took a trade, lost, and said, this is not for me. These are people that really tried. So they didn't look at any accounts that were under 300 days of trading. So let me just give you briefly what's in each report. You can look them up on your own and see the full pages. Some of these are 60, 70 pages long. State securities regulator. This is a North American study, okay, and these are this is what happened in the kind of the summary report. The report calls on firms for to fully disclose risk and screen customers better. This was the result of this report. Regulators urged to step up enforcement, explicitly ban lending schemes. And this is the sentence I want you to concentrate on. Independent analysis finds that at least 70% of traders lose money and only 11.5 might profitably trade. Okay, now there's a little gap in there of 18.5%, but that's telling you right off the bat that 70% lose and 11.5 might profitably trade. Well, I'm going to call those that 18.5% the strugglers who are not getting anywhere but just spending their valuable time and effort where they could have been actually doing something that they could make money in. And I'm going to call that they never described it in the in the study, but here's a sentence from the study: only 11.5% of sampled evidence the ability to conduct profitable short-term trading. So this is let's call this 88.5% losing traders. So I just want you to want you to feel that you're alone. You're not alone. Here is the profitable and losing client percentage of the European study. What they did is they actually voluntarily asked transactional firms to turn over records and black out the names and account numbers, which show me the results of trading. And these were the trading firms. And you can see that down here, we have 25% of the people, or 24% winning. This is the losing, but this is you see 24% winning, 76% losing. The best one they analyzed was somebody who was a third of the people were winning and 2/3 losing. And this looked pretty good, actually. I was surprised at how well this looked until I saw the second page. And then I saw that this was more. Now, again, these were firms that they didn't go in and abscond with the records. These were handed over to them. So I'm sure that most of these firms are honest and gave, but this one was this is 86% losing and 14% winners. But the average was 2/3 or 3/4 losers and 1/4 winners. And I think if they may have counted those strugglers as winners or non-losers. So it was very unclear in that as far as they were strictly going with what the records that they had. But let's call this, I tend to think the truth is that the results of the trade, if you ask these 100% of traders, 90% would trade it wasn't worth it. So that extra 15% or 14% that gets you to 90% from 76 probably weren't successful. I think you could agree with me there. This is the Spanish National Securities Market Commission resolution. This was the law that was passed. Well, the first thing, the binary options, they looked at those, and they looked at financial contracts for difference. Okay, that's anything that's offset. You buy a futures contract, you offset it. You buy a stock, you sell it. Anything that can be offset and result in cash. Particularly complex financial instruments, which are mainly characterized by the complexity and high risk, et cetera, et cetera. But I want to show you the result of this study. And this was done, looks like 3 years ago. They passed a law that said that these CFDs are complex instruments. You had to put this in every ad. This is what they say. This is where the warning that must be in every ad, okay? And in bold, you have to put between 74 and 89% of retail investor accounts lose money when trading CFDs. You should consider understanding how they work. But they made you put it in bold, and they made you put in this range. Now, again, this range, they're counting the people, I think, that go sideways and bang their head against the walls. These are the people who I think it's actually worth, I always say I'd rather know that I'm going to lose in a trade right now than hang on to it for 3 days and know I lost, so I can move on to the next trade in my system, because I know that over time my trading plan is going to work. I just need to keep taking trades. So, I don't want to be in that percentage between, this is 75, 3/4 definitely losing, and you got, or maybe in this particular case, they say that 89% are definitely losing, somewhere in that range. But even if you wanted to abbreviate the risk on advertising, you still had to put this. The most important thing was that bold sentence. And now the Brazilian study, and I'm just going to read it to you. We show that it is virtually impossible for individuals to day trade for a living, contrary to what course providers claim. We observe all individuals who began the day trading between 2013 and 15 in the Brazilian equity futures market, the third in terms of volume in the world. We find that 97% of all traders who persisted for more than 300 days lost money. Only 1.1% earned more than the Brazilian minimum wage, which is about $15,000 a year, and only 1/2% earn more than the initial salary of a bank teller, which is about $55,000 a year there. And so only 1/2% earned more than a bank teller. So 99% of people weren't earning, were either 97% were losing outright, and only 1.1% earned $15,000 more. So I just need to tell you that you're not alone. And I'm going to show you right now in the next step why this is happening. Look, I'm not here to bring you down. I'm here to say you can do this, but you're looking in the wrong place. You're probably spending your money in the wrong areas. You probably don't need another trading plan. And if you do, you're seeing there's enough in this particular, the 3 speakers that before me. I mean, Jousef with the volume, that guy knows what he's doing with volume. Jody is the queen of, she's it in the world, really, with Elliott, and Passarelli was going to follow me. He's the hottest guy around. You're going to learn how to trade, but they will be the first ones to tell you that their systems are not going to do you any good unless you can control yourself. Okay, and it's not easy, because the market is built to really, the industry is built to make that not happen. Okay, so if you're losing, if it's true, then why is it so popular? We've just proved it's true. 90% lose. Why is it popular then? So the reason number one is that there's very little regulation when it comes to advertising. You can put anything you want in an ad. I was in the introduction mentioned that I ran one of the largest option firms in the country. The office next to me was the I ran the home office, and the attorney next to me, Fred, was the attorney for the company, and we had to pass everything that we advertised. We had to pass by Fred, and as long as you put the words "can" in there, you can not you will, but you can be like Steve, who took $10,000 and made it $1 million in 6 days. I mean, yeah, you can, and it's not a lie, but you got to offset that with another statement. This may not be true for everybody. That's enough of an offset statement. So they're bloating the advertising. They're bloating the dream. They're pushing that at you. And whenever I see headlines or subject lines in emails that somebody took $5 and made $50 million, and I say to myself, this is allowed. There's nothing illegal about it. And for people trying to do business, I guess yes, it's possible, but they're not going to tell you that 90% of traders lose, and that of the 10%, there's 1/1,000,000th of 1% that's actually doing what it is possible. So if you put the can in, and as long as you put the boilerplate on the bottom, the trading futures is risky and only risk capital should be used, and past performance is not indicative of future results. As long as you put that in there, it's like a car salesman. And if you're a car salesman out there, that's okay. I love cars. Oh, am I muted? Am I muted or no? It said I was muted. Can everybody hear me okay? Can we mute it? Okay, I'm going to say that I'm unmuted, and if the moderator,
I can hear you. Is somebody saying that they can't hear you?
Yeah, I just got a signal on it that said I'm muted, but it could have been my excitement touching my mouse. I've done that before. In any event, that's the industry's advertising policies are not conducive to giving you the full picture. And so if you push the dream on you, you're going to keep on believing that it's definitely true for you. And it is, but you're going to understand the risk and why traders don't make it. The second reason is a reason that I believe most people don't discuss. I don't see anybody discussing it, but I think it's the main thing. And that is your trading plan or trading system needs to match you as a trader. And how do you know that? Not something that feels good, or not something that looks really good on the person who made the most money last year with their trading. That's the person who should teach you. That's not the match you're looking for. I'm talking about you need to inspect who you are as an individual. Am I a person that likes the action? Am I a person that's a little bit more cautious? Am I a person that needs to see certain conditions made before I'm comfortable with taking a trade? Because if you don't have a system that matches who you are, you're not going to get very far with trading. This is the biggest problem. And this mismatch is about what I see with most traders that I talk to. So the issue out there can likely also be that that all the gurus out there are, and I say that with love, all the gurus out there are selling you one size fits all type approaches, and it's up to you to discourage that for yourself and say, hey, that's not me. I can't, that's not the kind of, no matter how much money they're making, I can never really fit into that. So you need to analyze yourself first before you go. And then the third reason is the industry is complicit in what I call the hopping game. And, the industry knows that most traders are losing. Everybody that sells trading plans and trading systems knows that most of the people who buy their stuff are not winning. And that is and that is kind of the dark secret out there. And it's not up to them to discuss that. It is important for them to bring forward people who are winning out of their the handful or the lower percentage that are winning, so that they can see, hopefully encourage you to try it and be conditioned and be so that it's popular. But they really never get into the key, and that's the mental and emotional management, and that you need to see yourself as a trader, as an athlete, and not and to train your mind like an athlete trains their mind before they go out and perform. Because every time you open up your computer and you look at the market and you open up the charts, you're performing. You need to frame what you're doing as an athlete. There is no athlete around that does not train before their mind, their power, before they go to perform. The hopping game is something that always fascinated me. When I first got into the business years ago online, about 15 years ago, I was always amazed that a Forex guru, somebody with a trading plan, would send an email to their list advertising another person's Forex trading plan. And I thought, wow, why is that happening? Why? I mean, don't they like their own? Don't they think their system is the best? Why would they? Well, what's happening is they know most of their traders are not winning, and when they send you over to somebody else, if you buy that, they get a commission. It's an affiliate commission. It's very popular. Everybody knows it's happening, and buyers know it's happening. It's nothing secret. But if you think about what's happening, it's a quiet way of saying, you know, let me at least get paid for moving this person off to something that could help them, which is a noble thing to do, and they should be paid for that. But you have to understand from your standpoint what's happening to you, and that's you're being moved around from trading plan to trading plan, when the answer really isn't the trading plan. It's you. It's you. And how many times have you really focused on helping yourself from a mental and emotional standpoint? And when I say help yourself, I mean more than just reading a book or taking a course and never using it. And there are not many courses. So what's the answer to all the losing? Okay, I'm going to give you some of the answer, because now the ball is in your court. If you're ever going to finally be a consistently profitable short-term trader, you'll need to include a process of managing your mental and emotional capabilities. Or 2021, and you can see that this slide was from last year, it's going to repeat itself. Okay, so I pose this question to you. What is your primary thought or emotion that has you trade in a way that compromises or hampers your trading success? I'm going to stop right here, and I do want you to take a look in the chat. I'm going to see if I can find the chat here, and just, or you can put it in questions if you want. Just put it in questions and let me know what is your primary thought or emotion that has you trade. What's going through your head? Is it fear? Is it greed? What is it that's stopping you from being the successful trader that you know you can be? Okay, I'm going to wait for a couple of answers here, and in fact, I'll wait for one or two answers here. Okay, fear. That fear is the biggest. Is really is the culmination of a number of other fears, or it can stand alone and feed others things. Paralysis by analysis. That is absolutely true. Just saw another one. Paralysis by analysis. Holding stops too long. Yeah, or moving them around, even worse. Yeah. Very good. Well, thank you. Thank you for responding. Thank you for being with me here. Okay, so those are some of the things that I'm going to say. Now, you really have two roads to go down. You can continue buying more trading plans, continue down that road, or you can do something about it and take the road really to financial freedom. Look, you have the ability to do this. It's just that you've been barking up the wrong tree. You have what you need, most likely, in your trading plan. You just need to be able to follow it. Okay, so here is what I'm offering if you want my help. It's something we've called Excel. We just started this to put it in this form. It's the fastest and most condensed form to get you mentally and emotionally trained in a quick and fast period of time. It is a trading a trader transformation that happens in just 35 days. And here's how it works. I've only got about 10 minutes to tell you. The trader, and within this 10 minutes, normally I don't show you what I have for you until the last 2 minutes, but in this, you're going to learn whether you do this or not. But here's how it works. There are 6 weekly meetings. They start on a Monday, and the 6 successive Mondays, okay? And then after that, we work with between meetings, you work with the proven assets between meetings. I'm going to show you what that is. And then lastly, in these 35 days, you're going to be accountable to my wife, Tisha, and I. Tisha is a subconscious trainer. She is the one that has produced all of our mental training programs and capabilities, and she's the one that assists me when we're talking in our weekly meetings, okay, in our Monday meetings. So let's look a little bit deeper. Let's look at what the weekly meetings are. 6 Mondays. They're always going to be 5 p.m. Eastern time, and I did that because we have a number of people in Europe come. It's 10 p.m. in London, 6 a.m. in Singapore, 9 a.m. in Melbourne. It's the best we can do. If you're from India, I got to apologize, although Indians are used to getting up in the middle of the night. So I appreciate that. We have a number of clients from India that have taken our Excel. So I'm saying that it is it's recorded, so you don't have to be there live, but 5 p.m. is the best time. It's only on Monday, so that's all you have to block out. And in these meetings, I usually supply you with some kind of a worksheet or something to do not pre, but bring to the meeting so that we can all work together on whatever topic we're discussing, okay? And sometimes that topic, the first week we do hesitation to pull the trigger. The next week we do fear of losing, and then lack of patience, revenge trading, and so on over the 6 weeks. So we cover an important issue. You already named some of that in some of the chat that you just, when I ask you the question, so that you trade with confidence, you have the patience of a saint, so that you can wait till the signals cross before your ducks to fall in a row before you take action. And of course, everything is all these sessions are recorded, so that if you cannot make a session live, you miss a Monday or whatever, you can always be there for a recording. I got something special for you there too. Work with our proven assets between meetings. So you got these 6 meetings every Monday, and between the 6 meetings, you're going to work with our proven assets. You're going to work with our subconscious training. This is a picture of a neural net. This is your subconscious mind, really, in physical form. This is actual photograph. These are energy strings, literally, that are neural pathways. When you have a thought that, oh my God, I just lost again, maybe I should be a little bit more cautious, that's this energy, and that's this thought pattern. This is a neural pathway. And if you continue to have those same thoughts, you will build a neural net carrying that as truth for you in your subconscious mind, so that when your trading plan tells you to take a trade, you always respond with what your subconscious mind believes is true for you, which is to say, whatever the dominant neural net is for that question, for whatever. In my example, when your trading plan tells you to take a trade, okay, that's the stimulus. The response comes from this neural pathway, or this neural net, which now says, I better be careful. You miss the trade and you start chasing. So you need to build a neural net that responds to the same stimulus in the right way for a trader. And the way you do that is you drop yourself with a few deep breaths into an alpha beta brainwave state, which is very simple to do. We have 7, 8, 10-minute meditations that do that for you, where you're putting suggestions in your head that like, my trading plan gives me a trade to take. I take it without hesitation. I understand that my trading plan will lead me to success if I follow my trading plan. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Now you're feeding these neural pathways are feeding a neural net that will serve you, so that when you get the stimulus to take the trade, you're going to take it. without question. So that's a quick explanation of that particular asset. We have all kinds of meditations for you that match what we're working on each week. And this is a picture of a serviceman that is, this woman is helping him with something called EFT, Emotional Freedom Technique. Some call it the tapping solution. It is the go-to therapy for our servicemen and women coming back from post-traumatic stress with post-traumatic stress disorder, which is a critical situation. I'm not comparing our traumas with the trauma of the servicemen, but I will say that the trauma of losing money over and over again, especially money that you need to pay your mortgage or your rent, that's a trauma. And if it works for the servicemen and women, it works, it will work for you, and it does. So the tapping solution it's about using Eastern and Western philosophy, where you're tapping meridian points on your body, along with saying certain things at the same time to release certain energies. I know to some of you it sounds crazy, it sounds like nuts, but I'm saying it is the go-to therapy for those coming back from war and service. So it works, and we have specialized sessions that we've put together for you, the trader. So that's part of what we have. And then there's the accountability. Okay, we make you accountable to do those trainings. I mean, we're not going to pull up on your house and knock on your door, but I can't see behind the scenes what you're doing from a statistical standpoint. But when we have each meeting, we like to ask we like to ask you, have you been doing the trainings? And if you have, how many times have you been doing them? We need to make you accountable. You need to build the neural pathways. You need to conquer the phobias and the stress situations that you have with the EFT. You need to do the work in order to solve those problems, okay? And we make you accountable through these meetings also, okay? So again, 6 weekly meetings. We meet together. It kind of looks like this when we're meeting, okay? And we keep it down usually to a group of 10 to 12 in a group, so that we can, the sessions last 60, 75, sometimes 90 minutes if there's somebody that's sharing something. But it's on Zoom, really convenient to do. And again, you're going to get a worksheet. We all work together. I'll take 5 minutes. Everybody will work on the worksheet. We'll come back and we'll discuss what we've discovered from working with that particular situation, that particular trauma. Okay, and then we work with you work with the proven assets. I've mentioned it to you, the subconscious trainings, the EFT, Emotional Freedom Technique, what they call the tapping solution, and then you're accountable. So that's the process that makes it work. Here is Adam, who said, I can barely believe how my trading has transformed. I feel calm and in control every day throughout my trading session. I'm following my rules consistently after years of repeating the same mistakes over and over again, and all the stress and anxiety that I've always associated with trading have disappeared. And I've talked to him after this. He's associating happiness and positiveness now with a whole different way of looking at trading. And it's really unbelievable. And it's all thanks to the things Norman and Tisha taught me about the subconscious mind and the subconscious mind training sessions. I can't recommend the coaching highly enough. And that's Adam. This is MJ, who's actually in one of our classes now. Norman and Tisha have the tools, experience, wisdom, and heart to move traders from stuck to unstuck, their coaching targets, the very next hurdle to clear, to help you move forward quickly. If you're struggling, do this. So MJ out of Austin, she's terrific, a terrific trader. Will this be another year of frustration and money drain? I mean, if you're stuck in that 90%, you've got to get out of it, and I'm showing you the road to take. Or are you ready to reverse the fear of losing and start taking trades with confidence? Are you ready to stop jumping the gun on trades and start exercising patience and wait for your entry setups to complete? Are you ready to stop revenge trading and start taking losses in stride, knowing that the next trade and the next trade and the next trade over time, that it's a marathon and not a sprint? Are you ready to start taking losses in stride and act like and trade like a professional? Are you ready to get out of your own way when you trade and become the profitable trader that you know you can be? Then commit to taking 35 days, starting February 28th, and excel. Again, the course is called Excel because it is a term that athletes use. It's a term that we use for our traders. It's a 35-day program. Here's the link, thedisciplinedtrader.com/Excel. And I haven't even told you the price yet, have I? But before I do, here are the six Mondays. I've got a surprise for you here. These are the dates of the 6 Mondays in a row that start February 28th. But we're running a class right now in January that started just a couple of weeks ago. We had our second session 2 days ago on Monday. I am going to let you in this class. I'm going to let you in this group here. Okay, you'll be in this group, and you can go ahead and be in this group also. Okay, I don't want you to have to wait till February 28th. You know, and I thought of this morning. The year it's already started. Let's get started. We have the recordings here for you. You can get started. I'm going to give you, this is your class. This is your series of 35 days, but I'm going to let you in this one too, so that you can start working on your situation now, and then repeat it if you want. And whatever classes you missed here, you can take here. I want to give you every opportunity to be successful in 2021. And here's what we cover: hesitation to pull the trigger, overcoming fear of losing, lack of patience, revenge trading, trading as a business, framing your trading as a business, and sustaining for the long term your discipline. Here's what it looks like. This is what our class looks like now. Those that are taking it now that I'm going to give you access to. Okay, here, and every week here's the worksheet. There's a worksheet that I mentioned. Here's the subconscious training. Here's the EFT session, the tapping, where you follow along with Tisha. This is only about 5 minutes long, very quick. And here's the recording of the first session we did. And I just did this, there's already the recording of the second session, but here again, you see the subconscious training that we ask you to do between sessions, the EFT. So this is where you're going to log in and this is what you're going to see. Okay, it's $997, but I want to bring back our holiday pricing. And this is the last time I'm bringing back the holiday pricing because it's too far. I figure it was still in January, but so in this presentation, I'm giving you a coupon. Today's date, Jan 19, JAN 19. You're going to get $500 off. Okay, you need to take care of your mental and emotional wherewithal, and I'm making it easy for you here. JAN 19. That's the code for $500 off. So for you, it's just $497. Okay, there's the link, and I do want to mention to you that there is a guarantee that I've just added, and it won't take long for you to start experiencing the positive behavioral change we promise. And if it's not the case, just let us know before meeting 3. In your case, if you want to come to the meetings after your second meeting with us, if you don't believe it's for you, we didn't have any refunds. I don't expect any from you, but it's there if for some reason you're doubting that it could be for you. I want to give you, of course, the guarantee anyway. Okay. So, and if you secure your spot today, I'm throwing in a discipline, and you guys can have this too over. Okay. This is the mask, the Discipline Trader mask for since COVID's still around, and I'm going to throw in our very popular mouse pad, which everybody really loves. It's a kind of an oversized mouse pad, but you can continue to look at it and say, I'm a wise and disciplined trader. I'm going to send that to you only if you register your spot today, if you grab your spot today. And again, even though your spot is starting in February 28th, you're going to get access to the class that's going on right now. So here's the stats. Remember Jan 19th for that $500 off. There's the link. And thank you for having me to at least
Norman,
to let everybody know that there is a way out of the rat race, of the rat wheel. And you know, and hopefully I've proven to you that it is true and it's not your fault. But now that you know the truth, it's kind of on you. So let us help.
All right. Do we have any questions? We have about 1 minute left. And you know what? I posted your link in the chat. I posted the coupon code in the chat. People, you need to take a look at this and you need to take advantage of it because, I mean, mindset is everything. To me, this really resonates with me where the revenge trading and doing it as a business. I mean, come on.
Well,
It's
that whole
fantastic.
thing about the business, framing it as a business, you know, the late Joe Ross who's a good friend of mine, the late Joe Ross, wrote a book on trading as a business, and that really turned things around for a lot of the traders that we work with as an individual unit, where you frame your losses as the cost of doing business and you frame your profit as profit. You wouldn't take your profit and just throw it out. It's there to offset the cost of doing business, and at the end you're going to have the profit that you can take home. So anytime you can frame your business, your trading as a business, not only getting writing it off the right way and setting up the business the right way, once you start making money is what you want to do, is to defend, protect the money that you make. I'm talking about mentally framing it. So yeah, it's big. It's big.
Well, thank you so much. I always love it when you come and help our traders, and I hope you'll come back again.
I appreciate you having me, and I really enjoy it. I enjoy being with this crowd too. Do not go away, because Passarelli has a lot to say. This guy is, I'm telling you, he's the hottest guy around. I'm not kidding.
Oh man, thank you so much. I hope you have a wonderful afternoon, and again, I'm looking forward to having you back again.
Very good. Thank you very much. And thank everybody
Bye
for
now.
being here.
Thank you. All right. Okay, here we go, y'all. I'm going to switch some things around so you can see my. All right, I just want to remind you that was Norman Hallett of the Disciplined Trader. You have links in your chat to be able to take advantage of his offer, $500 off, holiday pricing still. And then next up is Dan Passarelli of Market Taker Mentoring. He's going to talk to us. He's going to tell us his secrets. Ex-floor trader reveals his secrets to trading earnings. So let me just do some housekeeping here. And now you probably can see my screen. Okay. And this is who's up next. I want to there you are, Dan. I see you now. I think you are self-muted. I'm going to make you the presenter, but I do have an introduction for everybody. Dan Passarelli is up next. Market Taker Mentoring. And you know that as a trader, it's your mission to empower yourselves with the knowledge you need to invest successfully, and that's why Dan is here today. He's a trader, an author, a world-renowned trading expert. He's a former member of the CBOE and the CME. He's a frequent contributor to Bloomberg Business Television, Fox Business News, CBOE TV, and he's also a really good resource to journalists. He's also an invited speaker who educates trainers for organizations such as NASDAQ, CBOE, the International Securities Exchange, CME Group, Fidelity Investments, TradeStation, TheStreet.com, and the Shanghai Futures Exchange, just to name a few. He's also a marathon runner, a musician, and he's a world traveler. So please welcome Dan Passarelli. Thanks for being with us.
Hey, thank you for that kind introduction, Sherry. And hey, thank you, Norman. It was great to hear from you from, from one webinar to another. Good to hear from you. I'm going to talk today about how earnings trading can be your most profitable trade. But before we get started, I need to point out that options are not for everyone, and you should read characteristics and risks of standardized options before trading. Each of us has the power within us to make trading a source of continuous wealth. And today, I'm going to share with you how to unlock that power. This is my promise to you. I'm going to share with you how you can replace uncertainty with confidence, so you can profit consistently no matter what the stock market is doing, using this simple, data-driven, real money proven earnings trading system that hundreds of our students have used to go from that demoralized feeling we've all felt at some time to that feeling of satisfaction and self-assurance that we all know is possible. And that is powerful. This can literally transform your life, because when you're confident, you trade better. And when you trade better, you're more confident. It's this positive circle that's easier to experience than you think. This technique I'm going to share with you makes it possible. It uses my proprietary earnings trading system, and at the end of this presentation, I'll share how you can take the next step so you can start getting immediate results. Fair deal? Yes? Are you liking this? Give me a big old yes in the chat box if you are liking what you hear. And don't be afraid to participate here. I want to know. We've got a yes from Matthew and a yes from John and a yes from Lisa and a yes from Raj. Awesome, you guys are great. Now look, in order to get the most out of this, I ask that throughout this presentation and afterwards, make this about you. Turn off your cell phone, close Facebook and all that, and let yourself get immersed in what I'm about to share. Let it become part of you. Like, let this in. And be sure to stay till the end of the presentation. The most important things that I will share come later. So I'm going to hold all questions. If you have a question, write it down, and let's keep it positive and have some fun. This is a pictorial representation of who I am, what I do, and some of the organizations that I've worked with. I traded for years down on the floor of the Chicago Board Options Exchange, wrote 2 of the most popular books on option trading, worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges in the world as well. And I get to be on TV a lot. I guess if you spend enough time in any industry, 29 years in trading for me, you get to do some fun things. But enough about me. Let's talk about you. I know some of you have traded earnings in the past, and I know some of you have not. Here's the thing. If you have traded earnings in the past, I can help you do it better and be more profitable with less risk. If you have not traded earnings in the past, then let me tell you, you are in the right place at the right time, because I'm the foremost expert on trading earnings. And look, those of you who know me know I'm not cocky or arrogant or anything at all like that. I'm definitely not saying that because of ego or anything. I'm saying it because of my experience, and that alone is why you should follow other successful people in this business, because their experience proves they know when and how to take money from the market. And I'm here today to share with you exactly what I look for in my process before I make an earnings trade, and just how simple it can be. So I'm not shy about saying this. And I'm also saying trading's, I'm not saying trading's easy by any stretch of the imagination, but I have my strategy down to a simple 3-minute scan that'll blow your mind. And today I'm going to share that process with you. All right. Do you mind if I share a short, would it be okay if I share a short story? Would that be all right? I think you're going to really like this. Give me a big old yes if it's okay with you if I share a short personal story. John says yes. Lisa says yes. Adam says yes. Bill says yes. Okay, good. So there I am with my little sister. This is probably 1979 or so. A lot of kids think they want to be a doctor, fireman, or teacher of some sort. But for me, I wanted to be a trader, even at that age, which I know is kind of weird, right? But I did. I saw traders on TV and in the movies and on the news and in their jackets in the financial district. And these successful traders were all around me in Chicago. And it excited me to think that they could make good money just being a trader. So right out of college, I took a stack of my resumes and I went looking for a job. I knocked on every single door of the Chicago Board of Trade building, and lo and behold, guess what? I got a job. And that's where I cut my teeth. I worked my way up from a runner, which was a totally entry-level position, to becoming one of the biggest traders in my pit. I actually started trading in 1998, and life was good. I was living the dream. At that point, it might have been the best time in 30 years to be where I was. And in a lot of ways, it just happened to be in the right place at the right time. Trading was easy. You could make some mistakes and still make money. Because you remember what was going on in 1998? You remember what the financial media called the market back then? It was called what was it called? The internet. Yeah, that's right. The internet bubble. It was called the internet bubble. Oh yeah, that's right. .com. Type a yes if you traded during the internet bubble. And I'm taking a poll here. I would like to get everyone to answer. Go down to the questions box and type a yes or a no if you traded in the internet bubble. John says yes. Frederick says no. Bill says yes. Adam says no. Lisa says no. We got more no's than yeses here. Well, I'll tell you what. That's okay if you said no, because I'm going to share with you an opportunity that you can take advantage of right now that can make you the same sort of gains, and it's just as easy to trade, if not easier. Now, speaking of that old internet bubble, you know what happened, right? In fact, you know what eventually happens to all bubbles, right? That's right, they all pop. And for most, when the internet bubble burst, it didn't really look like this. Like this cute little girl who's gonna, blows the bubble, pops it, gonna giggle and dance around. Like, it wasn't like that. It was something more like this. This is basically what happened to a lot of people. And I don't really talk about this a lot, but this is kind of what happened for me. I'd never seen a crash like that in my career at that point. And back then, I didn't know how to handle it. And in some ways, I did better than some, but it was bad. All of a sudden, nothing worked as it had worked before. Trades I'd normally crush weren't making money. And I started to lose my confidence. I was constantly second guessing myself. And I'll never forget this one time where I just got completely run over by a trade. I lost $500,000 in a single day. And that night I had to go home and have a conversation with my wife, Kathleen. The plan before that was to put my next bonus away for our kids' college funds. And that bonus was now gone. Kids' college funds were now gone. And I wondered if I'd still have a job. I wondered if I'd be able to keep my house. Now everything was different. And that's when I knew I had to create a trading system that works in all market scenarios. And as fate would have it, at that exact moment, I was presented with an opportunity. And it's funny how opportunities seem to come right at the right time, isn't it? When you get an opportunity, what do you do? What do you do when someone says, 1, 2, 3, boom, here's a great opportunity? You take that step. There are two types of people in this world: those who second guess everything, and those are the people who are always looking back, not forwards, who hesitate, and then there are the people who take action and create success. From the outside, it seems like these people are always getting lucky, but that's not it, is it? They take action. Type yes if you're the sort of person who looks forward and takes action. If you take that step. Hit that questions box for me. Are you the sort of person who takes action, or are you not? Give me a yes or give me a no. This is kind of fun, isn't it? Adam says yes. Bill says yes. Lisa says not always. Frederick says yes. John says I try. Look, here's the thing. The most successful people that are traders all have the same trait. They take action. It's about having an investor's mindset. It's about investing in yourself. Warren Buffett once said, the best investment you can make is an investment in yourself. Like you did today, like you showed up here for this webinar, right? You invested your time. That's the first step. One thing that I'm quoted with saying often is, you can't make a profit if you never make the investment. That's true, right? So, like many opportunities can, this opportunity that I was presented with changed my life, and it set me down the path that I'm on today. The exchange asked me to come and teach classes for them, and I found that that was my calling. At that time, I started trading in a regular non-professional trading account, like you. I was learning a different way to trade than I was used to, and I discovered that there were strategies that I wasn't trading the same way on the trading floor that were very powerful, that could make money in all market conditions, even the most unpredictable of markets. I made it my life's work to give back to the trading community and share these strategies with all traders and empower you however I can. And that's what ultimately led me to creating this earnings trading system that I use and all our top performing traders use. Now, this is simpler days. This is before this whole COVID business. At this point, Goldman Sachs was up 23% over this 12-month period. Question, would you be happy with a 23% return in a year? Would you? This is not a rhetorical question. I want to know. Would you be happy with a 23% annual return? Go and hit that questions box now, please. John says absolutely. Daniel says yes. Lisa says not really. Adam says no. Bill says yes. Well, we've got a little bit of a mix here, don't we? Frederick says no. You know, I think that the folks who said no, personally, I think you have an interesting perspective. And I like it. 23% a year is tough for some people. And what if I told you there's a strategy that it doesn't matter if the market goes up or down, is volatile or calm, you can still make money consistently and potentially really good money? Well, here's the big news. Traders can do better than returns like these in all markets, and you have to. Goldman Sachs has 36,600 employees, right? Now, interest rates are near zero. That's bad for banks. People are worried about inflation and the market's irrational. That's bad for money managers. Do you know what saved Goldman lately? Their trading units. Of those 36,600 employees, the average salary is $367,564. And that counts all the interns that are getting paid chicken feed. That's $13.5 billion before bonuses, and that's where the real money is. In order for Goldman Sachs to pay out $13.5 billion and all those bonuses and retain enough money to grow their stock by 23%, Goldman must make hundreds of percent a year. These are the kinds of trades professional traders make. That's why they make 300 or 400 grand a year before those gigantic bonuses. When I started on the trading floor, I started with a $30,000 trading account. Making trades like this daily, weekly, and monthly enabled me to turn that $30,000 well into the 7-figure area. It's more than 23%. And this is what's possible, and this is what traders are doing every day. And it's not just professional traders. This is Vic. He was one of our traders who traded our earnings system. Vic says, I've only been trading for about a year, but 2020 was one of the most difficult years, if not the most difficult year to trade, especially for a newbie like me. In spite of all the challenges, huge market up and down swings throughout the year and all the crazy stuff happening, I actually did pretty well, increasing my account value by over 30% between June 20th when I went live and the end of the year. That comes out to about a 60% annualized return. And he was brand new to options trading. Imagine what you could do with a little experience. So let me start out with a question. If you could consistently make money week after week, month after month, would you trade with more confidence? Go down and hit that questions box. I want to know, what's the answer? If you could consistently make money week after week, month after month, would you trade with more confidence? What say you? I'm taking a survey. Frederick says yes. Lisa says yes. Daniel says yes. John says absolutely. Adam says yes with all caps. Bill says yes. Right. Because look, in order to have confidence, you have to have consistency. You have to have these bread and butter strategies that are just data driven. They're created by a successful trader, built on data and math. They're tested for years with real money. And the strongest consistency trade right now is the earnings trade. There's several advantages to earnings trades. They're market independent. We don't care if the stock goes up or down after earnings. They're very short term on each trade, limiting broad market exposure. There's potentially greatly leveraged profits. There's an extremely simple yes/no test to screen trades. And opportunities are concentrated in a short period of time. Now, the biggest week of opportunities is next week, starting January 24th. Remember that date, write it down. January 24th, write that down. That's when there are literally hundreds of earnings trading opportunities that week. I like to call that money week because there's so many opportunities. Opportunities are the lifeblood of trading. It's having an investor's mentality, right? We are at the beginning of a life-changing time to trade. So when's the best time to be prepared? If money week's just, it's literally 5 days away, you want to be ready for it, right? When you want to start, next month, 2 weeks from now? No, the best time to get started is now. 1, 2, 3, boom. And the most important thing about earnings trades is simply that they work. And it wasn't until I was a trader, like most of the traders attending this webinar, trading in a regular non-professional account, that I discovered the power of time spreads. Ironically, after trading thousands of time spreads on the trading floor and honing my skills with them, mostly in the form of risk management and execution, I learned the last 10% nuance that pushed the power of time spreads over the top for me in a rather unique way. So this is about 6 years ago or so. Long story short, I found myself on the phone with a producer from Bloomberg Television. And the producer wanted to interview me down in the trading pit. And I was pretty excited. It was the first time I'd ever been asked to do something like that. Be on TV, global TV in front of hundreds of millions of people. So I said, well, what do you want to talk about? And he said, well, Apple has earnings coming out after the close today. We'd like you to give us a trade idea on how to trade Apple earnings. And then I was just like, oh man. Because what a lot of people don't realize is that professional traders usually don't trade earnings. They're not allowed to. Like at the high point of my career, I was in the top 5 traders in my firm as far as profitability. And I was basically allowed to trade anything I wanted, like with as much of the firm's money as I want, as big as I want. But I was never allowed to trade earnings because it's the most unpredictable, direction-wise, most unpredictable time of the year, time of the quarter. No, I've never met a trader in 29 years. I've never met a trader who could successfully predict direction on earnings. So I told the guy to hold on, and I went to my trading station. I was like, okay, what trade can I put on? Because, for those of you who know me, you know that I always put my money where my mouth is. If I'm going to talk about a trade on global television, I'm going to have that trade on. I'm going to believe in it. It's just a moral thing for me. So I was like, okay, I can't buy calls. I can't buy puts because those are directional. It'd be crazy to sell like cash cured puts or covered calls because there's too much risk. Credit spreads are no good. What can I do? And then I looked at a time spread and I was like, hold on a second. This is a great trade. I immediately put the trade on and went down the floor, did the interview, the trade made money, and I was hooked after that. And later I came across some data that you'll hear about in a minute that then gave me the black and white proof that this was no fluke. When the right criteria are met, this is a genuine consistency trade that can be used over and over again to crank out consistent profits with confidence during specific periods of the year, in particular earnings season. So 15-second crash course on time spreads. A time spread is when I buy a longer term option and at the same time, as part of one trade, sell an option with less time to expiration but has the same strike price. Now, the data show that these usually work out great, as you'll see on the next slide, when certain criteria are met. And this is really important. I'm definitely not saying just go out and trade a time spread on every single earnings play. That'd be a disaster. It would not work. But when certain criteria are met, these work great. Now, other times when other criteria are met, we use straddles or some other strategy, but usually those aren't as good. That's about less than 5% of the time. Mostly we're going to stick to time spreads, and let's look at why. There's a lot of data here. Don't get too hung up on trying to read all the numbers. Later, I'll explain how to simplify all of this. For now, here's what's important. Look right here. If you sell a short-term option the day before an earnings event, they lose value greatly once earnings are announced the next trading session, which is good. Now, longer-term options also lose their value between putting them on the day before earnings and then after the announcement. But the key element of this observation is that the short-term options lose way more value than the longer-term ones. So what that means, and what this essentially proves, is that when certain criteria are met, trading time spreads around an earnings event is effectively a long-run, consistent winning strategy. And you can see the results here. These are basically the steps to follow this system throughout this earnings season. So this is all important. Write this down. There are a few details involved, but this is basically the gist of it. First, we find all the stocks that have options listed on them and have earnings coming out after the close today or before the open tomorrow morning. All right, you with me? We can find several trades a day. Sometimes there are hundreds of opportunities. For example, the week of January 24th, there are literally hundreds a day. Again, that's an extremely important week. We screen those trades using the yes/no screen technique to see if we should continue on with the potential trade. And this is your first step and will literally save you hours and hours of your precious time and make your life so much better. Not to mention, it'll ensure you're only trading the best trades, the ones with edge, meaning they have a statistical advantage in your favor. So your win rate increases and your winners are bigger. You like this? Give me a yeah. Hey, hit that questions box. Let me know. Give me a big old yes if you are liking what you hear. Give me a big old yes if you are liking what you hear. Lisa says yes. Adam says absolutely. Daniel says yes, more please. Nice, I love it. So next we run, or excuse me, Frederick says yes. So we only continue on with trades that have a positive term structure of volatility. And the greater the disparity in the term structure, the better. This step is critical. This is what I did on the trading floor every day. And I put it into our earnings trading system to make this simple for anyone to follow. Next, we run the is-was check by modeling the spread on tomorrow's days with a variant vol crush on both the long-term and the short-term option based on a partial reversion to the mean, but also relative to realized volatility. And then we compare to the past to get the modeled endurable gap, okay? The modeled endurable gap is just my way of making this completely foolproof. So then it's super easy for you. Once you have that, you'll know exactly which trades to put on and which to stay away from. Now here is where most people go wrong. We need to put the time spread on the session immediately before earnings. This is less than a 24-hour trade, and that's critical. We follow the MTM proprietary earnings trade technique that I just shared and exit the trade at the precise time the following day. Everybody screws this up, but I'll share with you how you can get the timing right later, and then it's just rinse, wash, repeat. So let's go through some examples. This was a trade that someone could have made in McDonald's in a past earnings cycle. So a trader could have went through my checklist that I just shared with you, and all the criteria would have been met. It would have triggered this time spread. Trader could have sold to open 10 of the 4-day to expiration 165 calls at $1.75 and bought to open 10 of the 11-day to expiration 165 calls at $2.11. So this is one trade. This is called a time spread. Paid $2.11, collected $1.75. Net, I paid 36 cents for this trade. So then the market closes, earnings comes out. The next day, we wait for a few things to line up to follow our checklist, right? Then once they do, we can put it in order to take the trade off. So I put in order, like you put in order to buy to close the 3-day to expiration. Yesterday they were 4 days, now they're 3 days to expiration. 165 calls at 129, and then sold to close 10 of the 10-day to expiration. Yesterday they were 11 days. 165 calls at 181 and collect 52 cents. So 52 minus 36, the trade made 16 cents on a 36-cent trade. That's 44%. Let's make this more tangible. If you bought a 10 lot, you'd have invested $360 and made $160. Factor in commissions, of course, and this is a solid trade. Now notice, and this is important, I wanted to make this as black and white as possible. So I assumed buying the offer and selling the bid for presentation purposes. But in reality, because the bid-ask spreads were so wide, particularly on closing the trade, which is almost always the case, if I'd have used our technique of middling the market, profit would likely have been a bare minimum of about 20 cents better, which is like $200 more on the 10 lot. That'd be more like 100% return in this case. But again, I just wanted to show this example in a pure, unarguable way. In reality, managing the bid-ask spread on closing the trade is where most people go wrong. People leave thousands of dollars on the table every earnings season by not doing this part right. The results I show that are sort of the worst case scenario for this particular trade, they're good, but they can be great. So now I want to make this very realistic and show you exactly how this works in real life when you middle the market with the MTM 25-20 middling technique. These are some screenshots of my account on an earnings trade I made in a past earnings season. This is Oxy. So I went through my checklist, all the criteria lined up, and it triggered this time spread. So I bought 20 of the February 22nd 66 calls at $1.49, and I sold 20 of the February 15th 66 calls at $1.31, paid 18 cents. But if you notice, the February 22nds that I had to buy, they were offered at $1.50, but I didn't pay $1.50. I paid $1.49, I paid less. And the ones I had to sell were bid $1.30. I didn't sell them at $1.30. I sold them for more. I sold them at $1.31, smack dab between the middle of the bid and the ask. I should have paid 150 minus 1. I should have paid 120, but I paid 10% less. I started out this trade 10% better off. So the market closes, earnings comes out. The next day I wait for the 3 things that need to line up to happen, and they did. So I put in my order, just as the checklist says, put in my order, and I sold 2 at 30 cents, but I only got filled on those 2. So I still needed to sell the balance, so no problem. I didn't panic. I just followed the checklist, stepped down, sold the balance at 27 cents, and ended up with a 51.7% profit overnight. That's about $279 of profit in money terms, minus commissions. So, you know, those last two trades, couple pretty darn solid trades. Nobody's calling those bad trades. 44%, 51.7%. Do they all work out that great, make that much overnight? No. You're going to have a loser occasionally. And here's one that I lost on. Went through my checklist. All the criteria were met. It triggered this time spread. I bought the March 1st 29 puts at 91 cents. Sold the February 15th 29 puts at 71 cents. Paid 20 cents for the spread. And then market close earnings came out and it went way against me. Like exactly what I didn't want to happen happened. Did I panic? No, because this is a system. All I do is follow the steps. Very easy. So I waited for the things to line up that I needed to. And when they did, I put in my order to sell and I got filled at 19 cents. It ended up being a 5% loss on that trade. And look, I've made hundreds of these trades. I could go on and on and on all day long. This is another one I made in Las Vegas Sands. Bought the May 3rd 68 calls at $1.76, sold the April 18th 68 calls at $1.26, paid 50 cents for this time spread. Market closes, earnings comes out next morning. Wait to see if the things line up. Once they do, put in my order to sell, got filled at 70 cents. And that's a 40% profit in one day. Comes out to about 300% overnight minus commissions. The key here, though, is consistency, driving consistent profits. If you can make $300 on one trade, $500 on another, $280 on another, and there are hundreds of opportunities, how much money can you make in just a single week using this strategy? Really, I would like to know what you think. Like if you decide to take the next step and follow this system all next week with my guidance during Money Week, and there's hundreds of opportunities to analyze a day, and you can make $300 on one trade, $500 on another, $700 on another, $280 on another, how much do you think you can make trading just next week? I want to know. Let's see here. Lisa says $5,000. Bill says $10,000. John says $2,500. That's why a consistent system is so powerful. And that's why management is so important. Makes sense? Management makes money. If you can follow a checklist, finding, analyzing, setting up, and making the trade is simple. And closing the trade simple too. You simply take it off the next day, but it requires a little nuance. And I'm going to share a resource to make those nuances super simple in just a moment. Look, this is a system, and that's why this is easy. Work the system, and the system works. Let's talk about realistic expectations. You create your own reality. As they say, you make your own luck. You take the actions that make things happen to make your life what it is. Am I right? Really? Not trying to be philosophical or anything, but don't you believe that's true? Do you believe the actions you choose determine your future? Yes? And if you don't take action, if you do nothing, nothing changes, right? Profitable trading is a reality for many traders. We have traders in our online community chat room who are some of our top money-making students. They're really successful, regular folks, just like you and me, who post their trades real time for all to see, who've made the decision to be profitable, to simply do it, to make that choice. And by the way, in a moment, I'll reveal how you can get free access to the MTM community chat room for 6 months. Here's how to make this work. It's a simple process anyone can follow. Timing's urgent because earnings season has already begun. You can make the next 6 months your best of the year and repeat that success in future earnings seasons throughout your trading career. You can finally make your trading easy. It's about time, isn't it? This is the Total Earnings Domination All Access Premium Package. In this course, I'm going to share with you how to replace uncertainty with confidence so you can profit consistently no matter what the market's doing using my simple, data-driven, real money proven Total Earnings Domination System. Here's just some of what you'll learn. How to easily scan the market for earnings trades, where to get real-time data that pinpoint the winningest earnings trades, the best time of day for entries and exits, the yes/no screen technique blueprint, the earnings time spread risk checklist to maximize gains and minimize losses, calculating the is/was gaps, how to manage wide bid-ask spreads on closing the trade. You'll also 100% understand how to know when a stock is more likely to outperform on its earnings announcement, set up profit and loss targets, select the optimal expirations to maximize profit potential, and of course, management makes money. You now have a new opportunity to trade more consistently using a strategy that works in all market conditions. To get a blueprint for earnings trading and watch live setups of earnings trades so you can easily follow along. To make the next few weeks your top performing weeks yet. And if you've had a bad run at it, maybe to make back losses on trades you already made. Let's first talk about who this is not for. This is not for people looking for a get-rich-quick scheme or gamblers. Yes, it is possible to make a lot of money in a short period of time. But I want to be clear, this is not gambling. This is not guessing. I've done the math. You just follow along. You trade with a mathematical advantage like a professional trader. And it's completely simplified so anyone can do it. This is also not for people who would rather spend time and money and endure losses to learn on their own over many years' time. That's silly. It's also not for wishy-washy procrastinators who can't make a decision to save their lives, but that's not you because you showed up. You've already taken one big step investing in your future, investing in yourself today. This is for you if you want more consistency, and this is for you if you want low-risk trades with high profit potential. This is for you if you believe your success is tied to following a methodology. This is for you if you can follow a few simple steps. And this is for action takers. And for my action takers, I'm going to make this really easy for you. This is our Total Earnings Domination 6-month all access premium package. So first of all, let me share with you what you're going to get with this class. You begin with the brain dump part of the training, Secrets to Trading Earnings Bootcamp video. I'm going to put 29 years of my experience into your head with this one short video. This is the keys to the kingdom. That's a $2,995 value. Why is it $2,995? Because if you can make the kind of money that we're talking about consistently on daily trades throughout this earnings season and for the rest of earnings seasons this year and forever, this small one-time investment can pay you over and over again for a lifetime. And as you can see, there's no auto renewal on any of this. But isn't it important to you to make sure that you can put the knowledge to use, that you can actually do it? Well, today you're going to get hands-on training. Starting January 24th, you'll log in and watch me trade live in a real money account, so you'll see exactly what to do as you follow along with me. You'll literally see the system being traded in the live market, and you'll make your first trade together with me as a group. This is the ultimate hands-on training. And we want you to literally have this mastered. So you're also getting our 4-part masterclass, Earnings Trading Techniques from 2 decades on the CBOE trading floor. You'll know exactly what to do every time. This puts the power into your hands. And you'll have questions. So today, you're also getting 6 months free of the MTM community chat room. You'll log in and get all your questions answered by me or our other coaches. But another huge sort of secret benefit that I shared with you earlier is that the MTM community chat room is where our top money-making traders log in and post their trades live, real time. This is an all-access premium package valued at $7,437. But I want to make this a complete no-brainer, completely irresistible, so you can confidently, immediately join us right now. A 1,000,000-mile journey begins with the first step, and this is that step. Go to markettaker.com/TED right now and get all this for a small, easy investment of just $497. 1, 2, 3, boom. That is a massive 93% off discount, and it is valid for the first 40 of you who take action right now. Now, why would I give such a huge discount? Because earnings season has already begun. And I want you to be one of our 1,000 success stories that we strive to create this year. People who take action are the ones that can be great traders. When you see a great opportunity and fearlessly act on it. So to reward the traders that'll move forward, this 93% off is valid only for the first 40 people to join us right now at markettaker.com/TED. That's market as in stock market, taker as in take what is rightfully yours, markettaker.com, 2 T's in a row, markettaker.com/TED. And here's a special bonus, not on that last slide. I want to make sure that this works for everyone, regardless of your experience level as an option trader. Even if you're brand new to options trading and never made an option trade yet. To make sure this works for everyone, today you're going to get the Options Impact Quick Start video course. This on-demand course levels the playing field for beginner traders. It covers all the basics you need to begin trading options confidently. Even if you've never traded an option before, you'll be able to start trading like someone who's been trading successfully for years and put you on the fast track to maximize your gains this earnings season. And here is the big one. And this is not for everyone. Action takers only. You are going to get this course that every one of our top traders has gone through. We're going to share live weekly drill down master sessions together. This is the MTM Trade Smart Workshop. This is where I pull back the curtain. Each month, we pick a different topic to drill down on and give you expert understanding of it, so you can achieve mastery as an option trader. I can't open this bonus up to 40 people, I just can't. I can only invite a handful of traders so I can manage this process with you. Look, I take this very personally. You're investing in your success today, and so am I. So I want to have quality control. So it's essential that I keep this bonus class very small. Every week, this inner circle group gathers online. The next webinar happens tomorrow. And that special session continues the hands-on portfolio management series. That's at the heart of the total earnings domination system. Management is so key. For your convenience, these are all recorded, and with your password access today, you'll instantly get access to that series as well as mastering time spreads, which is what you're going to be trading. The trader's mindset, so that you don't hesitate, so that you take action and do invest in yourself and make the trade. Mastering vertical spreads and more. This is a $1,794 value. I'm opening this up only to the first 16 traders who take action right now. Ready? 1, 2, 3, boom. Go to markettaker.com/TED. Look, this earnings cycle is one of the most important in the entire history of the stock market. Analysts are waiting to see what the earnings are to give guidance for the future, and that means traders can make more money than they ever have before. This process has already started. When you enroll today, you will have just enough time to get through the brain dump training of watching the bootcamp video and the masterclass to be ready for the first live class on Monday, January 24th. These are the 5 most important classes you'll attend this year, probably this decade. So this earnings season is the opportunity of a lifetime for those who choose to put that opportunity into action. So it's go time. For those of you who have been waiting for the right trading opportunity, this is the opportunity to change your life. Also, in the past, because earnings season is quarter by quarter, when someone joined, they got 3 months access. But I had some people tell me, but Dan, I have a commitment and I can't make all the live classes. Or Dan, I'm gonna be out of town for part of earnings season, so I wanted to make sure everyone who invested in the class was able to fully use it and get the results they expect. So my team and I decided that with the total earnings domination all access premium package, we would make the class available for a full 6 months. So as of today, you'll have plenty of time to get through all the material, and you'll get to attend the 5 live earnings trading sessions in April's Money Week 2. Those 5 hands-on sessions are all 100% totally live. Frederick, by the way, Frederick asked how to join. Frederick, go to markettaker.com/TED, markettaker.com/TED, and I'm just going to reply back to you. You can just click that link that I replied back to you in the questions box.
Hey, Dan, I
Yeah?
also put it in the main chat.
Oh, great. Thank you, Sherry. I really appreciate that. All right, so there you go, Fred, and everybody else. So I'm going to prove that anyone can do this, regardless of experience or account size. So here is my guarantee to you. I'm actually trading these trades live with real money, so you can see exactly how it's done and follow along. In fact, I'm using less than $10,000 in my account to show you that anyone can do it, regardless of account size. So right now is go time. Go to markettaker.com/TED go. Meet Jill from Cincinnati. She joined our class a couple quarters ago. One of her first trades she did together with us in the live coaching sessions. She bought a Microsoft time spread that met her criteria, as did I and other students in the class. She bought the spread at $2.65, and in less than 24 hours, sold it for $3.75, locking in a 41.5% profit. And she posted real time in the MTM chat room, which you will have the same access to. The MTM community chat room is where all our top money making traders log in and post their trades live real time. Look, if all you got out of the total earnings domination premium package today was to watch some of our top 6-figure traders posting their trades real time so you could follow along, wouldn't it be worth it just for that? Wouldn't it? This is David Z from South Lake Tahoe, California. He says, close the last 5 at $1.41, total gain $425 less commissions. The class has paid for itself. And that was just in the first week, money week of the quarter he joined. This is Russell K from Glendale, California. He says, I'm above an 80% win rate. Most of the others were maybe a 5% loss. Only one total loss out of 16 trades. Like you said, middling is really important and waiting for the bid ask to normalize. Just waiting that hour made a few of the trades winners instead of losers. What he's talking about is the chat room, because I am in there all day long chatting with the students saying, hey, wait, look, this hasn't lined up yet. And that's what I told Russell that day. He was ready to get out and take a loss. I said, no, this hasn't happened yet. And he waited and it became a winner. This is Tyler M from Lexington, Tennessee. He says, I took Dan's MTM course about 7 years ago in college. It was my first exposure to a structured options trading strategy. He started me down the path that I'm on today. Now, I'm a professional options trader at a fund. So look, if you're brand new to options, I'm giving you the bonus of the Options Impact Quick Start videos. If you're highly experienced, this is also a great class for you because we train people to go on to become professional traders. Again, this is limited to the first 40 people, and I can see we've had a good number of people join us so far. Awesome. Thank you for joining us, and welcome and congratulations to everyone who just joined us. Welcome, let's see here. Welcome, Daniel. Welcome, John. Welcome, Lisa. Welcome, Adam. Welcome, Bill. Welcome, Byron. Welcome, Stephen. Welcome, Ernesto. Welcome, Robert. Awesome. Like, congratulations and welcome. And by the way, all of you who just joined, congratulations. First of all, you are going to love this class. Check your email and see that you got your username and password. If you didn't, check your spam folder. Sometimes it gets in there. Next thing I want to talk about is, can you use PayPal? Yes. If you go to markettaker.com/TED, you can choose PayPal as a payment option. But sometimes people will say, hey, Dan, you know what? I can't swing the $497 right now. I want to get started, but I can't do it. Well, you can choose PayPal credit, and that's the best of both worlds. You can make installment payments, and you can still get started and start enjoying the results right now. Just go to markettaker.com/TED and click the yellow or blue PayPal button to get started now. A few frequently asked questions that we get, is this live or recorded? It's both. I know you're busy. Not everyone can make it to the live classes. You can attend the 5 live earnings trading classes I mentioned, but if that doesn't work for your schedule, that's okay. I will record them and you can watch it when it's convenient for you. So those of you who just joined us, you got your username and password. You can start checking out some of the recordings now. How long do I have access to this class? Only with this offer, the Total Earnings Domination All Access Premium Package, will you get an entire 6 months access to all these materials. You'll have plenty of time to master the system. Is this time consuming? No, in fact, it'll save you time so you can spend it doing the things you love with friends and family. And it can save you years of struggle and foregone profits. Look, you can spend years figuring it out on your own. But right now is the hottest earnings season you're likely to see in your lifetime. You'll be able to go through this simple course now and start seeing immediate results. How do I know I'll be able to do it? Because this comes with hands-on training where I'll show you in the live market exactly what to do with real live trade setups. And the number one question we get is there a limit on the number of students who can join? And that answer is yes. We have to limit the number allowed in the live component of this package, or else it gets out of hand with questions. I want to give each of you my full attention, so we have to limit the number we let in. I have a small team committed to student success. If you're committed to doing your part, we will do ours. And therefore, today is limited to the first 40 traders who are serious about maximizing your gains during earnings season. So once again, to get 93% off and become one of our 1,000 success stories this year, go to markettaker.com/TED and join us for a one-time, small, easy investment of just $497. And the clock is ticking and it's crunch time. If you're ready to make this happen for yourself, right now is the time, because our first session begins Monday, January 24th at 3 o'clock Eastern time. It actually starts a half hour earlier than that, but you're going to see that in the email you're about to get. All right, do we have any final questions to help you make the decision to join us and participate in the most important earnings season that you're ever going to see? Any further questions? Yes, no? All right then, that said, trade smart. Thanks for joining me, and I'm going to turn it back over to Sherry.
All right. Thank you very much, Dan. I appreciate you being here with us. Guys, it's https://markettaker.com/TED, TED. And this is a phenomenal offer. So you should go and check it out. Dan, thanks so much for being with us. And I know that I can count on you coming back again, right?
Yeah, thank you so much for having me, Sherry. I really appreciate it.
All righty. Well, thank you. And I'm going to go ahead and make myself the presenter again. I hope you have a wonderful evening, sir.
All right, see you. You too, Sherry. Good night. Bye.
Good night. All right. All right, guys, here we go. Well, it's been a great day, hasn't it? I want to thank everybody for being here with us. I want to thank all of my presenters for being here with us. And we had a little bit of snafu at the beginning, but it turned out really great. And this is Sherry, your host, and all of us at Traders Exclusive saying goodbye and trade well.